and welcome to our first panel of our measurement track here at Emerge Insights. My name's Helen Robb, and on this panel, we're going to be discussing how to unlock insights from customer data. We have access to more information about our consumers than we ever have before. So how do we use that to support their financial health journeys? I'm joined by three wonderful guests who will be helping us to pass through how to use customer data to drive insights and build impact for financial health while protecting customer privacy and safety. A reminder that you can be part of this discussion by asking questions or adding comments in the comment box to the right of this video. We look forward to hearing from you. Today, I am joined by Fiona Gregg, the director of the JP Morgan Chase Institute, a think tank dedicated to delivering data-rich analyses and expert insights for public good. Stephanie Woods, the Senior Manager in Marketing Data and Analytics at BECU, a nonprofit credit union in Washington State and one of our financial health leaders. BECU have paved the way in the use of transactional and customer data for financial health measurement here in the US. And then last but not least, we're joined by Ben White, who works in policy and research development at Plaid, a data aggregator with the mission to democratize financial services through technology. Good morning, everyone. Your three organizations each play a really important role in utilizing customer data for financial health. I'd love if you could each introduce the type of work that you do and how you use customer data to further your mission and your roles in improving financial health for all. I'd love to start with you, Fiona.
Sure, and thank you for having me. So the JP Morgan Chase Institute, we use the firm's administrative data to do economic research for the public good. And my team accesses a range of consumer products. So that's primarily checking accounts, but also credit cards, mortgages, and other loan products. And I think the intent here is not to say something about Chase customers, but rather to use the millions of Chase customers to create a view of what's going out there on the economy. And that's tricky insofar as, of course, we exclude people like the unbanked by construction. But with these very large sample sizes, we are able to mirror the income distribution that's out there, and reweight our data as necessary to create that view. And so, many of the topics we've covered are to understand, with this high frequency view of income, spending, balance sheets, or liquid assets anyway, just how volatile income is, how that translates into spending, how important cash buffers are in financial resilience for families. So that's kind of the top line.
Great, thank you. Stephanie, I'd love to hear how that translates at BECU and how you use consumer data.
Absolutely. BECU, it is in the organization's purpose statement to directly improve the financial well-being of our members in their community. So we very much wish to directly at the micro level understand and track and improve all of our products, services, and tools that we offer, and understand which ones can have the greatest impact on our membership. Like most organizations, we don't have endless resources. And so we want to be able to have the greatest impact with what we have, and also to constantly optimize it and improve and make sure that they're doing having the impact as intended. So definitely research and development purposes are the main use, but there's others as well. This year has been an unprecedented year. And so also being able to track membership and understand if and when the financial cliffs may be hitting. If, for instance, in March and April, there was just a huge backlog of individuals who were furloughed, laid off all at the same time, and all needed assistance very quickly. And so we would like to be able to understand, anticipate, and proactively help those members so we can get them back on track as quickly as possible.
That's great. And Ben, could you talk a bit about how Plaid uses or enables others to use customer data for improving financial health?
Of course. So for those who aren't aware, Plaid is a data aggregator that serves as an infrastructure layer for the fintech ecosystem. And what that means is that we enable consumers to connect their bank accounts as well as investments accounts and liabilities accounts, to financial technology applications that can provide them products and services to help them improve their financial lives. So while we ourselves are not a financial services provider, we do provide the connectivity that enables our 3,000 customers on the fintech side and the 10,000 financial institutions that we connect with to leverage their data, both for the purposes of building products and services to help their customers, but increasingly we're also seeing demand to use that data to provide a real-time picture of consumers' financial lives, not just at the individual level, but at higher levels in the ecosystem as well. And I know we'll spend some time in this conversation talking about what that means across different parts of our ecosystem, and I'm very excited to get into those details.
That's great. Something that excites me about bringing the three of you together is that you have very different purposes for how you want to use data, and something that comes through this year is around how rapidly insights can be turned into action as a result of using customer data at a moment of crisis. So I would love for any of you, but we'll start with Stephanie, to talk a little more about what you mentioned there, how you've been able to use customer data to really focus response during this pandemic.
Absolutely. Two main ways, of course. We very much, as closely as possible, internally have tried to replicate Financial Health Network's survey-based scoring model. And so we use that segmentation to understand, track the coping, the healthy, and the vulnerable. But we also have created a separate segmentation that's much more event-based, specific to the details of this year. So for instance, we have a COVID-19 impact segmentation. And so that tracks at the member level, three basic tiers. The top tier are members who are, we know that they are having difficulties because they're requesting assistance. They are requesting loan forbearances. They are requesting 0% interest loans, any number of avenues of help. The second tier of members that we're tracking are those who we can see are losing income. Well, we can see that they are receiving unemployment benefits that they did not previously were receiving, that they're either stopped receiving direct deposits or receiving a lower amount in direct deposit, or also just general income loss. And then the third tier are those members who are changing behaviors, members who were previously not delinquent, but now they are becoming delinquent, or members who are experiencing a rise in insufficient fund fees and late charges and things like that. And so by cross-referencing the two, we can track the financial health of those event-based segments and see, are their situations getting worse? Are they improving? And then be prepared to help them. Because we definitely want to help those who are the most in need in time of crisis first. Because if we have long lines that build up, it may be those who are healthy that make it to the front of the line. So we want to make sure that we're helping those and prevent them from going into collections and other things as quickly as possible. So using the financial health score with other custom segmentations this year has really been beneficial.
That's great. And I think the other way that we've seen some insights around kind of what's going on beyond the customer level has been through the work that you've done, Fiona, at JP Morgan Chase Institute, looking at the aggregate, how the economy is faring and how customers are faring throughout the pandemic. I wonder if you could share some of the insights that you've gained from customer data there.
Yeah, I mean, it's for somebody who looks at data, I think, every single chart I look at, it looks like a data anomaly. The data spikes and the drops are just so large relative to history that you have to first ask, this can't be right. And yet it is right. So a couple of the things that we've seen, obviously an enormous drop in spending right in April when the national emergency was called. And it was at the tune of sort of 30–40% drops in spend that cannot be attributable to the job losses that were happening at that time. So you really know that this has much more to do with the pandemic than with the initial kind of economic fallout. Then the second thing we saw was both a rise in both spending and savings right when the economic impact payments hit. And those many of them hit accounts on April 15th, but trickled in afterwards. And so from there, we've seen actually spending, recover more quickly for low-income families than for high-income families. And that's because obviously a $1,200 check is a larger relative check for low-income families than is high-income families. But also larger percentage increases in balances. Again, because a $1,200 check is a higher percent increase on a low balance than a high balance. But the story from there has been interesting to continue to watch, which is that we're continuing to see high balances and spend levels sort of slowly come back to their pre-pandemic baseline, more so for low-income families than for high-income families. And I think the work that we have been doing most recently on unemployment insurance recipients is, has been some of our most impactful work in terms of just pure pickup, insofar as we studied people who were receiving unemployment benefits in July and August. And of course, that $600 supplement ended at the end of July. And what we observed was that spending among those job recipients, those benefit recipients, dropped by 14% in August when those benefits expired, but also their savings levels also dropped. And indeed, the savings levels of jobless workers had doubled between March and July over the course of those 4 months, but people had spent down 2/3 of that additional buffer in just 1 month alone. So that kind of tells us that what's going on in July is not a terribly sustainable trend in terms of what we might see going forward if we don't see additional stimulus, or we don't see an additional improvement in the labor market. So we've been, as you can tell, I'm pretty fired up about kind of what we're seeing in the data and what it means for the macroeconomy, because these data, are our pulse on what's going on in aggregate, but also to these specific pockets of people who have been most impacted by COVID-19.
It's so fascinating. It's so fascinating, and I could dive into any one of those insights. But when we think about this at the measurement level and in terms of tools that we have to understand customers, it feels like this moment is brand new in terms of the depth of the crisis and the immediacy of the crisis that we've had. It's also the first time that we've had a crisis like this with this level of availability of information and ability to rapidly churn that information. I know, Ben, you've been doing research thinking about the impact of fintech and the ability for customers to rapidly access different types of services through mobile, use their data to access new types of services themselves. I'd love for you to talk a little about how Plaid's helped to enable some of that rapid response that we've seen in the pandemic.
Sure. Well, I think first I'll say that, the work that Fiona is doing is incredibly important in terms of its implications for how we think about, policy going forward. And I think for all of us, that's incredibly important as we think about how can we update our infrastructure, not just in terms of a financial services industry, but also going forward, and how do we support everyday Americans in their financial lives. As it pertains to some of the research that we've done, as I mentioned, we're not conducting research on our own data, but we did go out into the field and conduct a consumer survey with the Harris poll right in the middle of July. So, as folks were sort of coming to terms with this world that we're living in as the new normal, and we really wanted to understand what the impact has been on consumer behaviors and their engagement with financial technology. And what we found is that for just about 3/4 of Americans, they expect fintech to be the normal way that they engage with their finances going forward. And just to be clear, fintech, we're not excluding in any way sort of core, financial services online offerings, but I do think it's a really important consideration as we think about how to deliver products and services to consumers going forward. I think we were already seeing trends moving in the direction of greater digital adoption of financial services, and COVID-19 just really accelerated those trends in a really powerful way. So in addition to that COVID-specific research, we also conducted a broader survey just to understand, how well do consumers really engage with fintech tools? Are these tools something that they're truly comfortable with, and are they seeing benefit? And we actually have a report that we're planning to release tomorrow that shows that fintech is really having an impact in consumers' eyes on their overall financial well-being. And I think it really for us is a motivator to continue enabling consumers to through control of their financial data, to be able to go out into the ecosystem and share it with the service providers that they want to be engaging with, and recognize that institutions have the capacity to leverage this data to provide them with really powerful services. So I think it really paints a picture of the ability for the availability of the data that we currently have to provide that insight both up and down sort of the chain in our ecosystem, from the individual level up to really the ecosystem level. As Fiona was mentioning, some of the trends that we're seeing really do affect not just consumers themselves, but also how the industry responds. And then all the way up to the policy levels, we're thinking about the financial services ecosystem and the impact that this shift to technology is having, and the broader policy considerations around things like stimulus going forward to support individuals and our economy.
I think that that's a great way to help us to really wrap our heads around how all these different pieces fit together to get a broad understanding of consumers using their data to help them to understand what to do next. And we had a question from the audience specifically for Stephanie, which is, does BCU use financial health metrics to proactively reach out to members and who are experiencing some of these significant declines in their financial health? And if so, how do you structure that way of connecting with folks?
Absolutely. I would say that it's a project that's in development right now in case a second wave of assistance is needed. It was not used in the first one, but it's definitely on the table. And so we're definitely tracking in order to see how needed is it before we actually launch it. And so, I'm sorry, what was the second part of that question again?
It was, if you are connecting with folks as a result of what you're seeing in their data, how? So how are you thinking of doing that if it is needed?
Right now it is limited to those with active loans, and we do not have data on how they've responded yet because we haven't actually launched it. So apologize, it's a rather short answer to that question.
That's great. And I think we're hearing all of these different ways that folks are getting benefit from their data being used for these measurements. I'd love to talk a little about some of the risks of using consumer data for measurement, for drawing broader conclusions. And I know, Fiona, this is something that you're passionate about in your work at JPMC Chase Institute.
Yeah. Well, first of all, in terms of the conclusions one draws, I alluded to the fact that that we don't see the unbanked, right? There are limitations in terms of how representative these samples might be. And I think, we're always quite careful to benchmark our samples against, national statistics. And so that just goes to show how complementary these data sets, are. And, the caveats that are required with which, to interpret what we're seeing and the blind spots that we might still have, given that we are using, administrative data portfolio to inform what's going on out there. I think there's another important risk, which is obviously, customer privacy. And this is something that we have taken very seriously from the beginning, in that the premise of the JP Morgan Chase Institute was that everything we were going to do and that we do is public, and that we release publicly. And so in order for that to be possible, from the get-go, all of our data had to be stripped of all of their identifiers prior to the Institute team receiving these data. And, so there's the de-identification process. There's also the risk of re-identification, right? Because by the time I know, this person's age and their zip code and their, income level and their age, and all that kind of stuff, you might be able to start to re-identify people. So we have pretty strict controls around that, to the point that, and then the third thing I would say is that everything we do is aggregated, right? So obviously we never report anything that is, a single person, even to the point of a median, right? So a median is actually usually a single observation. And we always have to go back through all of our code to make sure that anytime we're calculating a median, we're actually taking, an average of the most median observations. So this it is part of our DNA to be careful about these things, from the point of, data delivery all the way to data publishing. And I guess, I am passionate about this topic because I am wildly enthusiastic about all organizations seeing their data as hugely valuable, not just to themselves, but potentially to the world. And I think it's really important that we always start with the privacy, because it sort of only takes one actor to do this the wrong way for it to sort of spoil it for the rest of us. So I think of this as a common good, that, this privacy question is a common good, and it's easily threatened, right, when we aren't all stewards of this common good.
Absolutely. And I think one piece that is really interesting from what you shared is around some of the limitations of what you can do, and kind of understanding those limitations, not trying to push the data so far that you make it meaningless, but trying to understand how it connects with other data sources, perhaps in the case for BECU, connecting with surveys or connecting with national statistics. We had a question from the audience about how do you actually do some of the work that you do, Fiona? How do you track some of the volatility in accounts and see the volatility in income and expenses by proxy? And how do you kind of recognize some of those patterns? I wonder if you could talk to the type of statistical methods that your team use, just at a high level, to give the audience a flavor of the type of work that's going on.
Yeah. Well, it's really tricky. And I would say that because when you have access to high frequency data, the first thing you notice is that it is very volatile. And that's because every single incomes trend or spending trend or any way in which we transact has its own inherent heartbeats, right? So for example, we spend 30% more on Fridays and Saturdays in normal times. When we're not on lockdown, we spend 30% more on Fridays and Saturdays than any other day of the week. And so when you look at a spending trend, it's going to go like this, and so you can't call that volatility. That's not very interesting to call that volatility. And so a lot of what we try and do is try and sort of figure out the pulse, right? What is the heartbeat? And then get rid of that heartbeat. And then what's remaining is volatility, right? And that's always hard because God didn't create our calendar in very logical ways, right? We have things like February 29th and 5 Friday months where we pay people, on every other Friday. And then there are certain months of the year where you have 3 Fridays or 5 Fridays instead of 4. So it is actually, I can't even tell you the number of times I pull out my calendar and start staring at the cadence of the days in a given month this year versus last year and all the rest of it. So it's tricky, but I think the lessons of this work that we have gleaned are that incomes are really volatile, and spending is also volatile, but actually, and they're kind of comparable in terms of how volatile they are, to the tune of 30% swings on a month-to-month basis in income, and that's like adding or subtracting a mortgage payment or a housing payment, right? We think of housing as being no more than sort of 30% of your budget. So the fact that incomes can go up and down to the tune of 30%, that's actually having an extra mortgage payment or not having one, right? So we have learned that it is really volatile, and and I think one of the things we spend a lot of time on is literally just knowledge translation, right? So volatility is best summarized in statistics like variance and standard deviations and coefficients of variation and things like that, which don't translate to very well to a lay audience. And so we do those, but we also try to come up with numbers and ways of thinking about it that are salient for the end user being maybe somebody in the press who's trying to translate this for a policymaker on the Hill, or an end user who is actually just somebody trying to sort out their own budget. And so whether it's through data visualization or through additional concepts that are just more easily understandable. We try to attend to the end spectrums of our audiences, be they, academics or, Main Street.
That's great. And I think that gets to a really important part of all of this work, which is around not just how do we use this information to gain insights, but how do we make those insights have impact? I'm going to ask Stephanie, I know we talked briefly about in the limitations of consumer data, there are some ways to fill in some of those gaps with surveys or with other ways to gain insights about your customers. Could you speak about what limitations you see in customer data and how you try to pull different sources together?
Absolutely. I think every financial institution tends to specialize in certain products, and so products and services. And so for us, we measure, we know for many members, we're not capturing their full financial picture, especially when we're focusing on first-party data. We may have a lot of accounts and transactional activity in a checking account, but we may not have their mortgage. Their mortgage may not be with us, or their long-term investments may be somewhere else. So we mostly use probability modeling, sort of say we estimate that this person is healthy based on the data that we do have. And there can definitely be limitations in that. So for instance, one limitation is just exactly as Fiona said, we saw a massive increase in deposit balances over the course of the year. Very strange juxtaposition of very high unemployment and very high financial health. Like our financial health score increased a median of 5 points so far this year, and traditionally year to year it's only increased by a single point. And it's coming back down again, but it's actually been stabilizing. But then, the question does arise, is it perhaps people who are drawing down from their retirement too early in order to subsidize unemployment at this moment? Are some of those deposit balances coming from external accounts that are not signs of improving in health and signs of declining in health, doing negative behaviors? And so it takes a lot more investigation to look into those types of details. And when reporting, I never assume that, I always warn that we do not have the full financial picture. These are the trends that we're seeing, and I try, not to go to reading too much, accompany it with national trends, work from Fiona, and also surveys to sort of help balance that. So we did launch a special financial health survey this year that covered the core financial health questions, but also accompanied with specific COVID-19 impact questions, like who's had a loss of income, how extensive was that loss, and try to pull all of those sources together to get that true holistic view. But just relying on any one method, either self-reported responses or what we're seeing in transactions can be misleading.
And one of the benefits that Plaid can offer to its customers is the ability to pull together to face some of that limitation by pulling together multiple data sources. I wonder if you could speak about some of the research that your customers have been doing using that wider data set.
Sure. I really just want to amplify Fiona's point earlier around the importance of privacy and security, and really just tip a large cap to JPMCI for really pioneering and opening this space up where there's just going to, I think, continue to be growing interest from all parties, and making sure that we are making the most of the data that has become available. And I think what's most promising about that is that, for folks who might be listening and might be trying to understand where do I fit in, we really, both through our own experiences and what we've seen some of Plaid's customers doing, are big believers in the ability of partnerships to help get this data into the right steward's hands in order to be able to do not just that translation, but also to make sure that the handling of that data is really strong throughout. So just as a couple of examples, we ourselves, Plaid, we're very fortunate to partner with Financial Health Network as part of their Pulse survey this year, where we built our link portal, which is what we deliver that allows consumers to permission and consent to sharing their data, in this case, specifically for research purposes. And I know that there have been a couple of presentations already, and we'll continue to hear more from FHN on just how powerful those findings were in terms of bringing together not just the various data sets that consumers have as they increasingly, as Stephanie mentioned, are using products from across various providers, but also really that intersection of their financial sort of status day to day in terms of dollars and cents and what they're thinking and feeling about their finances from a sentiment standpoint. So I think FHN is doing some really interesting and pioneering work there as well. And then just two other examples of really powerful partnerships that we've seen. Savor Life, and I know they're talking, I think, later today about some of their findings. I know partnered with Columbia University to share some of their customers' transaction level data and do some research there. And then Earnin had partnered with Opportunity Insights, which is Raj Chetty's group, which is doing real-time data visualization in the context of providing additional insights around COVID. So just wanted to flag all of those as ways that, you know, we as a data aggregator are always here to support our customers in their efforts to obtain that data in order to conduct their own research. And some really exciting ways that we're seeing those partnerships play out in the real world and hope to continue to see them flourish and grow.
You hit the nail on the head there, Ben, which is our audience might be thinking, this sounds great, really inspiring. We can get these macro insights and be valuable to the world and we can connect with our customers, but how do we get started? So I wonder if you might be able to each share a piece of advice for an organization that maybe is earlier on in its financial health journey and just starting to think about how to harness some of the consumer data assets that it holds right now. Fiona, would you like to get started?
So, I mean, I guess start with the premise that these data were not created for measurement, right? These data fall out of business operations. And so they are a byproduct of business operations. And so what that means is that, you know, when the census creates a survey and publishes those data, they publish a README file, they publish a data dictionary so that others can self-discover what exactly does this field mean. And I think the first thing we discovered was we can't assume what these data mean. And we need to partner with our lines of business to, you know, really make sure that we're interpreting these data correctly. And, you know, something as basic as like card not present. Well, yeah, okay, so does that mean I bought it on the internet, or does that mean is that a gym membership I swiped once, but then each subsequent month is a card not, you know, like you start to realize that these data could be you could easily interpret it in ways that might not be consistent with, you know, the world out there. So that would be one thing I would just start with, be humbled by the notion that like these data weren't created for measurement, and therefore you can't sort of self-discover what they mean. You have to do that in partnership with the business.
That's great. And Stephanie, from your experience of getting started with this as a financial institution, do you have any advice to share?
Absolutely. I would just say to not wait for perfect circumstances or a perfect data set or a perfect model. It's wonderful to start small with what you have available. Even if it's just a couple of input points that you combine together into an overall average, that's more than enough to get started and to start supporting those business units in their projects. Also to really advise or encourage others to sort of dig into those data sets, to pull out real life examples from them. I find that in our institution, those are some of the most impactful internal research that we share. It's like exact examples of what's happening in people's lives, rents that are rising, forcing individuals to move, car crashes, or especially the difficulty of individuals who hold multiple jobs and have the burden of maintaining an older vehicle that may break down often, and that influences their income. Sort of getting those details from that very rich transactional data can have a very large impact on promoting empathetic banking, breaking down stereotypes, and really understanding your customer base a lot better. So I just sort of encourage to, when you get that level of detail, just really dig in both the micro level and the macro level. It's very helpful.
That's great. I have an eye on our time. So Ben, do you have just a quick piece of advice for folks?
Sure. Just, recognize that if you're seeing the gaps in the overall picture of consumers' finances, that this infrastructure exists to allow your customers to pull in that data and share it with you, and they I'm sure would appreciate you having that information so that you can provide better services back to them. And then in addition, just one last sort of plug for the policy angle, we're just seeing so much interest from federal regulators around what can be done in this current context and going forward to improve our infrastructure around things like credit reporting. And I think that there's just a tremendous amount of interest out there from your findings, not just for your own customers, but for the ecosystem and our country at large.
What a great note to end on. So what I'm hearing is start humble, start scrappy, seek help, and use the resources available to you. I think that's good life lessons as well as lessons for how to use customer data. I want to thank you all so much today for sharing your insights and your lessons, and I'm sure inspiring more of us to think about how we can leverage some of the data at our fingertips to influence financial health. Coming up next in just a minute, we'll be hearing from Andy Bandyopadhyay, who is Financial Health Network's head of product. He has an exciting preview of Financial Health Network's new products that should make measuring financial health easier than ever. Thanks again to everybody for listening and participating.
Here at the Financial Health Network, we care a lot about consumer financial health, and we know you do too. We're thrilled to see so many financial institutions advertising their commitment to financial health on their websites, on billboards, and in their mobile apps. In fact, so many financial institutions make these commitments that it's no longer a differentiator for consumers. So how can you show, in addition to say, your commitment to improving consumer financial health? How can you understand the unique financial needs of your customer base and design programs and services to address those needs? Finally, how can you understand the long-term impact of your programs and services on your customers' financial health? Over the past 15 years, we've worked with hundreds of organizations on these questions and more, and we know that the tools for addressing these questions are slow and unwieldy. My name is Andy Bandyopadhyay, and I'm the head of product at the Financial Health Network. I was brought on to address exactly these shortcomings. I personally know this pain. Before I joined the Financial Health Network, I was head of science at Even, a company on a mission to end the paycheck-to-paycheck cycle. As head of science, I managed a team of data scientists and user researchers with a mandate to learn what actually works to improve financial health and then implement it and make sure that we were tracking our impact over time. I saw firsthand the difficulty of survey distribution and of connecting survey data with transaction data and other in-app product metrics. Before Even, I was one of the first hires at Varo Money, the first ever fintech to get a national bank charter. As one of the first hires, we were on a mission to build a new kind of bank with consumer financial health in the DNA from day one. I learned all about using our own transaction data integrated with data from external accounts via PFM and with surveys. And I saw how slow and frustrating it was to pool all of those data sources together to answer a very simple question. What do our customers most need, and how can we best help them? I was excited to come to the Financial Health Network because it allowed me to do this work on figuring out what customers most need and what we as financial institutions should do about it on a broader scale. I'm now building software to make the diagnosis and rollout of programs and then impact assessment of those programs much, much easier in a way that can be used by hundreds of financial institutions rather than just the particular one that I was working at. I'm really excited to show you what we've been busy building over the last year. This is just a sneak peek and it's just the beginning, but I hope you'll enjoy it.
How do you know what your customer base actually needs? Well, the first thing is to ask them. And we've made that quite a bit easier. Go to Add, give your quiz a name, choose your brand color, choose who you'd like to survey, add any optional questions. The demographics will benchmark to the US Financial Health Pulse. The open-ended question allows you to hear from your customers in their own words. And then NPS and CSAT let you look at customer loyalty and satisfaction alongside financial health. And finally, email name zip lets you follow up with people one-on-one if you're using a public web link rather than emailing people. In this case, I'm emailing people. I'm going to have it go out on a Monday morning at 10 and end pretty late on a Friday night, and then have reminders go out 2 days after the survey starts to folks who haven't responded yet. And then at the end of the survey, I'm going to direct them to the Financial Health Network website. In under 60 seconds, that financial health scoring quiz is set up and ready to go and will be emailed out on October 19th. Now, the dashboard is where it starts to get really fun. Let's say you've emailed your customers, you've asked them what they need, now you're going to see your results. At a glance, you can see what proportion are vulnerable, coping, and healthy. You can look at the financial health score broken down by spending, saving, borrowing, and planning, and look at each indicator as compared to the US average. And then in this interactive panel down here, you can look at overall health or do a deeper dive into each of the 8 indicators, either in terms of vulnerable, coping, and healthy, or in terms of how the survey question was worded. You can also filter by age, education, income, and region. Your financial institution's results are in color, and the US Financial Health Pulse results are in gray. Finally, you never have to take screenshots again because all of these are downloadable. So that's all well and good in terms of the measurement, but what do you actually do with this? Well, the first thing to look at is the shape of the distribution. The second thing to look at is what are people struggling with the most and what might you do to help with that particular indicator? In this dashboard, for example, the lowest scores have sufficient long-term savings. Finally, if there are any particular populations you're trying to serve, it might be good to narrow down here and look at what their particular financial health needs are. This is just a preview and it's just the beginning, but I'm so excited to share what we're working on with you and to share a little bit about how some of our early customers are using this. Some of them are using it for prospecting. They're embedding financial health quiz links on their websites so that they can learn what website visitors need and then talk to them about how the institution could help them with their financial health goals if they became members or customers. Other early customers of ours are using this to establish a baseline to understand where their customers are now in terms of financial health and what they might be able to do to help based on those particular needs. I'm really excited to be working with early customers who are so committed to our vision of helping organizations optimize for financial health in every single business decision. We still have room for a few more early customers if you'd like to help in the early days.
Hello, everyone, and allow me to reintroduce myself. My name is Joshua Sledge. I'm a Senior Director at the Financial Health Network, and I'll be your host during Emerge Insights. Thank you so much to the first panel for diving into the ins and outs of using data to measure financial health and plot your strategy. And it's so exciting to see Andy be able to share what he's been cooking up at the Financial Health Network for the last year. We're really thrilled to see what he's got coming about. So quick few technical notes before we get to our next session. First off, I see a lot of you are already using the chat box. Fantastic. Continue to keep those questions coming. Continue to ask questions of your attendees, fellow attendees. Secondly, closed captioning is provided by the World Institute on Disability. You'll see a link to that underneath the chat box if you'd like to access that feature. Third, if you're having any technical difficulties, take a look at the blue box on the bottom right-hand side of your screen. If you click through there, we'll be able to help you via our help desk. So next, let's dive into our next session and try to take this conversation around measurement and think about what it looks like to measure when it can be hard to reach the population you care most about. So understanding the power of measurement can often mean diving below the headline metrics and asking deeper questions. In our next session, Evelyn Stark, lead for financial health at the MetLife Foundation, will speak with Tim Lucas, the director of research at SaverLife, to learn more about he faces the challenges of measuring populations who have been traditionally underserved and how he shares his findings with the people who need them. And with that, I'll turn it over to Evelyn and Tim.
Good morning, everyone. Good afternoon. I am Evelyn Stark. I lead MetLife Foundation's financial health globally and, of course, in the U.S. We are the financial health partner of the Financial Health Network, which I have to say sounded less strange when they were the Center for Financial Services Innovation. I'm here for the next 20 minutes with Tim Lucas. Tim is the Director of Research at SaverLife. The foundation also partners with SaverLife, and we're here today to talk about the work that they are doing. They are a great channel to reach people. I know that we as a funder distributed direct grants in the early days of the pandemic through SaverLife. And while their outreach and size, their national breadth of the platform is so great, it's the next step that SaverLife does that makes them such a special organization, I think. And that's because they use the data that they get from their customers and they analyze it, they report it out, they share the data. The data is, of course, what we're here to talk about today. Tim, can you give us a quick overview of your role at SaverLife, and the kind of data that you collect on your clients?
Yeah, absolutely. And hi, everybody. And it's great to be here today. So for those of you who don't know, SaverLife is a nonprofit fintech organization that helps lower income families build a habit of short-term emergency savings. And we do that through a variety of different ways, like financial coaching, but we also do that with savings challenges. And so what people do to join these savings challenges is they link their savings account to our platform. And when they do that, that gives us a read-only view into people's financial lives. And it gives us a really, really unique perspective on what's going on in the financial lives of low-income families. And then on top of that, we also ask a lot of demographic questions when people sign up. And, you know, given that we have such a great connectivity to our members, it gives us an ability to do really frequent and rapid polling. And so, you know, with the combination of those three things, it gives us an incredibly unique data set that allows us to answer some really interesting questions.
Great. I've seen some of that in the newspapers, on your blog, and you put out really current information from your data. Who's reading it? You know, why are you choosing data points that you're choosing to share? What do your readers do with what you're putting out there?
Yeah, you know, so when the pandemic started, and you alluded to this in the opening comments, we sat down and we said there's two things that we can do right away to help. And so the first is use our platform to distribute cash to people who need it the most. And then the second thing that we realized we can do is just put out constant insights really rapidly. And so we had been in this sort of pattern of publishing, a report a month or a report every 2 months, but with just the rapid iteration of the news cycle, we realized we just needed to publish things as we learn them. And so it's being used by a lot of people. I mean, we're working with some advocacy organizations to make sure that people understand what's actually happening out there. We're working with academics to do some more in-depth analyses on spending habits and saving habits and where people might be falling behind. And then, lastly, providing our data back to members where we think that there are opportunities for them to benefit from that data.
So that third point is actually kind of rare. Most researchers collect the data, write the paper, and never really tell their members, or whoever answers the surveys and polls, what it actually said. So why do you do that? How do your members react to it? And, what else has it helped you do vis-a-vis your membership?
Yeah. So I think, the first part of why we do that is it's their data at the end of the day. And so we want to so it's really important to us that we share it back to them. And people come to SaverLife to sign up for a savings platform. They don't necessarily come to SaverLife realizing that they're signing up for a platform that is using aggregate data to try to change the game. And so we're really trying to make sure that they are involved with that and part of the feedback loop. So that's kind of the big rationale for it. And a pretty good example of a way we've done this year is when we sent out, we did some polling on how quickly people were receiving their stimulus payments. And we were really surprised to find that a good percentage of our members said that they didn't qualify for stimulus payments, which really surprised us. And so we did a follow-up poll and we asked them, why do you think you don't qualify? And what we realized is that there was a ton of misinformation there. A lot of people thought they didn't qualify for reasons that just weren't true. And so we took that information and we shouted it from the rooftops to make sure that policy people understood that and to make sure that advocacy organizations understood that and could do something about it. But, there was also this idea that for members to receive those stimulus payments, they actually had to go to the IRS website and press a button to make sure that they would get it. So we shared the data back to them and said, look, you might be misinformed on this. Here are steps that you need to take today to get your stimulus payment. And the response to that was incredible. I think it engenders a lot of trust with our members. And it was one of our most read posts of the summer.
So you posted that, and if you really got a good response, that means your members are actually engaging with your platform. And why do they come to your platform? More than just to look at a balance, and or did you also send specific emails to clients or members that you saw hadn't seen the stimulus payment?
Yeah, we didn't. We did send an email out to our member base broadly. We do have a member newsletter that we send every couple of weeks. So this was included in that. We can't necessarily see every single account that somebody has. So we don't know specifically who has gotten it and who hasn't gotten it. But we definitely try to inform very broadly to our member base and say, a good 20% of the people we polled might not be getting a stimulus payment and they actually might be eligible for one. So that was kind of our approach there.
Great. Can you give us some other insights on the data that you're seeing, how you're cutting it, how you're segmenting it, especially because you get a lot more demographic data than a lot of the banks, for example?
Yeah. I think that really depends on the research question that we're answering at that moment. So, I'll give you a really good example of that is when the media was really discussing back to school and some of the challenges that might be that parents might be facing there, we had done a couple different polls on, the degree to which people had the ability to work from home, or the degree to which people had school-age kids who would have to be remote schooled. And so we did some segmentation using the responses to those actual questions. And we then merged that with another question we'd asked of, do you think you're earning more or less now? And what we found is that people who have children who are being schooled at home and don't have jobs where they are able to work from home were 38% more likely to say that they're earning less money. And so we think that it's important that policy folks understand this dynamic is happening and understand that, there's a group of people who are being squeezed on both ends, right? Where their incomes are lower. They're also now more responsible for, providing food for their families because there's no school lunches. And so this is causing a problem. And that's the kind of segmentation we're doing to get to those types of answers.
So, if you look at the news, they're saying, you can see, people are making more money now than they were before because the unemployment checks are larger. Mm-hmm. Do you think your cutting this data, got to the right policymakers where they were able to see, hey, that may be true for one subset, but let me tell you about this subset of customers?
Yeah, I hope so. We're a pretty small organization, but we do work with some wonderful partners who have, shared a lot of the data that we've put out, and we're really thrilled for that. And we're always looking for more partner organizations to collaborate with on getting the word out there. So I do really hope so.
I also know that the Save Your Life website, if people aren't already checking in there, they really should. Because one of the things that I think is so good about your website is it's not just Tim's data and your team's data. There's a lot of human stories that you put in there where you can kind of see what the data looks like, for an individual or for a family, which I think is really helpful, particularly for advocacy. And so I'm guessing that you work pretty closely with your communications team in order to make the data actually accessible and readable.
Yeah, it's that's absolutely right. I think that data is data, and what we try to do is bring in stories with that data whenever we can. So, if we're sharing, we just published a report yesterday that talked about the impact of the cash grants that we put out. And, it's one thing for me to say that SNAP recipients who received the cash grant were far more likely to spend over $250 in a given month on groceries than those who didn't receive the cash grant. It's another thing entirely to hear it from somebody who is telling that exact story with their kids sitting right next to them. So we do try to bring the data and the individual stories together to share those insights.
Great. Speaking of those savings, as you are Save Your Life, you have been watching your members protect and sometimes even grow savings throughout this pandemic. And you've seen some other strategies that folks are taking. But I think in the last graph I saw the data is coming downward. So, what do you think the data is, or what is the data telling us right now?
Yeah, I think, and an earlier panel touched on this as well. We are seeing a lot larger withdrawals from savings accounts. So we're starting to see an uptick in people taking out pretty significant amounts out of their savings accounts. We're also hearing from our members that, while more people are going back to work, it's still well below where it was pre-pandemic. And for those who have continued to work through the pandemic, they're working far fewer hours. So that's definitely an issue. At the same time, we're seeing credit card balances really starting to tick up a bit. So these things are concerning, but at the same time, we're also really thrilled that month over month, 50 to 55% of our members are still increasing their savings balances. You know, and that gives me a lot of hope, and it's just illustrative of the fact that Saver Life members are thinking ahead and know that there's a lot of uncertainty coming, and are doing everything they can to make sure that they're going to be prepared for whatever comes next. You know, if I had a crystal ball, I mean, who knew we would be where we are right now? And I think, you know, our members understand that as well. So, you know, they're rightfully planning ahead.
So we have a question, which is one that you and I had talked about, and I think people do want to know, when you disaggregate the data by race, what disparities are you seeing, and what can you do about it as Saver Life?
Yeah, that's an interesting question. So, I mean, at this point, we haven't necessarily looked at pandemic impacts directly by ethnicity. We've started looking at it. Our demographic leans more towards persons of color to begin with. It leans much more towards women. We're 70% women. A lot of those women are single mothers. So we haven't broken it down on racial lines at this point, but that's partially because of how our overall member base is construed. But we have done some work this summer with an organization called Liberation in a Generation to talk about, what our members' beliefs towards the racial wealth gap are. Some of the things that we've heard from that have been incredibly interesting is we ran this survey back in November of last year, and then we ran it again this summer, and we learned that people knew, Black people in the Saver Life member base knew that there was a racial wealth gap. That hasn't changed at all. But what has changed in that time is people are far more likely to attribute the causes of the racial wealth gap to systemic causes. And so that's been an interesting turnaround that we've seen this summer. And, they're ready to do stuff about it. A vast majority of the respondents to that poll say that they're ready to get out and be active and vote this fall.
Great. You're making me think of another project that you and I are in together, which is the Consumer Insights Collaborative, because Commonwealth has also surveyed, has also done a survey on how people attribute the racial wealth gap, and internal versus whether it's internal to the person, whether it's systemic. And that's fascinating research. And I think they're probably finding what you're finding. But when you looked at that, what I would also be interested in is, what did the white members of your members base respond? Did they have a change in understanding of systemic causes of the racial wealth gap?
They did. I mean, that was pretty in line. I think you saw an uptick in that as well. We didn't poll our white members. We didn't poll our white members in the fall, but we did this summer. And what we saw there is pretty high awareness of systemic issues causing those types of gaps, and pretty high likelihood of saying that these are problems that are systemic within our country.
Yeah. You guys have also expanded your membership quite a lot during this time period. And can you tell us where you were as a member base? You were born in California, and I happen to know you have a lot of customers in Warwick, Rhode Island. But where are you? Oh, it's like that new meme, how did it start and where is it now?
Yeah. So Saver Life has been around. It was, originally earned. I think a lot of people might remember that as an IDA program in the early aughts. But around 2016, we transitioned to being an online technology platform that helped people save. And we've partnered with Plaid to allow it so that anyone with any bank account in the country is able to link to our platform. And that's really helped us expand pretty heavily. And so while our roots were in the Bay Area, the distribution of our members across the country looks like a population map of the U.S. And that's been driven by a lot of wonderful partnerships. One with Fresh EBT, whose platform Propel, whose platform Fresh EBT allows their member base to check their SNAP benefit balances. And we've been partnering with them for a long time. So we share a lot of members in common. So I think we've just actually hit the 400,000 member mark, or I think 440,000 member mark. So tremendous growth in the past year, a lot since the beginning of the pandemic, surprisingly, which has, I think shown that in this time of uncertainty, people are wanting to make sure that they are making sure that they have enough money for the uncertainty that's coming down the road.
So that Propel connection, I think, also triggered another audience question, but was also going to be mine. How else can other folks get connected with you? How else can you increase your membership?
Yeah, we do that through a variety of partnerships with employers. So if there are employers listening, we have many partnerships there with credit unions who leverage our platform to help their member base save, and banks. We work with a lot of community-based organizations like various United Ways around the country who are partnering with us to allow SaverLife to provide a savings benefit for their members. We also partner with other fintech apps as well. So we have partnerships with a few FHN members organizations as well.
Excellent. Final question, I guess, is there any surprise that you have seen in the data that has, kind of shocked you?
Shocked, not necessarily, but here's a fun one for you. How much do you think that spending at Amazon, Target, and Walmart has gone up year over year?
27.4.
That's a very specific response. It's 51%. So yeah. So we're looking at those types of spending patterns and how people are changing. But that's a fun fact, not necessarily a shocker.
Yeah. Hey, Tim Lucas, we are out of time. So thanks so much for doing this. Thanks to Financial Health Network, and thanks to people actually putting in audience questions. Always great. Thanks again to everyone.
Thank you, Evelyn, and thank you, Tim, for sharing a little bit about how SaverLife approaches measurement and working with its clients. I thought it was really interesting to hear how the organization is using both transaction data and client interviews and really being able to respond to questions in the moment, both to inform the ways they're providing support for their clients, but also to tell stories to the rest of us so we can understand what's happening in underserved communities and think about what we can do to help make a difference as well. So for our next session, we'll step beyond our shores and see how organizations abroad are approaching financial health measurement. The panel will explore how setting measurable goals and smart stakeholder engagement are key to supporting the financial health of individuals and communities. I'm really excited to hear what the panelists have to share, and I'm sure they'll leave us with a few lessons that us US-based organizations can apply when measuring financial health. So I'll turn things over now to my colleague, Alejandra Ruelas, to moderate this discussion.
Thank you, Josh, and hello, everyone. My name is Alejandra Ruales. I am a senior manager at the Financial Health Network and lead our Financial Health Leaders program, working with member organizations that are measuring financial health. Today, I am joined by two fantastic guests. I have Nick Watkins, who's the head of Insight and Evaluation at the Money and Pension Services in the UK, and Ahmed Dermish, lead specialist in policy and government advocacy at the United Nations Capital Development Fund. Nick and Ahmed, thank you so much for joining us today.
Thanks.
Yeah.
To get us started, I'd love for you to share how are you using measurement in executing your strategies? Nick, from your perspective, MAPS is working on an ambitious 10-year strategy for financial well-being with the goal of helping people in the UK make the most out of their money and pensions. And Ahmed, UNCDF works to unlock public and private resources to reduce poverty and support economic development. So why is it important to have financial health measurement at the center of your work?
Yeah, great question. Well, UNCDF works across 48 of the world's lowest income countries, and we have a long history starting in the microfinance context, moving into financial inclusion, into sort of digital financial inclusion, and more recently financial health. So this is something that we've always been sort of focused on, is like, how do we ensure that we know where we're going and measuring the outcomes that we expect to see globally, and every market is a little bit different. And I think perhaps a metaphor we could use is measurement is kind of like it's your compass, right? And it's providing the direction that you've identified you need to go. And financial health measurement, in a sense, anchors your strategy and evidence. I'm looking around me. I know what I expect to see. Going with that metaphor, it's like, should we be on the mountaintop at this point? Or shouldn't we be on the mountaintop at this point? Why are we in the valley? And I think it's really powerful when you're trying to bring a lot of people together to solve a complex problem. And at UNCDF, we try and look at our work from a market development perspective and take an ecosystem-wide approach, working with public and private sectors. And so defining outcomes and measuring progress is fundamental to getting those stakeholders together around a compelling vision. And you need to know what works and what doesn't, especially over time. Financial health is not something that we think will get solved tomorrow. It's something that's an ongoing issue. And so without measurement, it's hard to align people's incentives. It's hard to know whether you're doing the right thing. It's so fundamentally critical to get everyone to work together and to proceed in the same direction.
Absolutely. I think something that we've talked a lot about before is you can't actually fix or you can improve what you don't measure, right? And clearly UNCDF is working with multiple organizations. You're working on cross-sector collaborations, anything from policy, from regulation. You have your fintechs, you have your more traditional financial services companies. And I think this brings me to the question on what key stakeholders need to be engaged for a successful national financial health strategy, and how organizations align measurement metrics when working with the public and private sectors. I mean, as you know, there's different ways that a lot of these organizations are measuring outcomes. So when we're thinking about a national financial health strategy for financial health, what does that look like? And what are some of these key stakeholders that should be on the table measuring financial health?
Yeah, it's from our view, the value of being a UN agency, in most cases, we can retain some degree of neutrality, which practically means we end up kind of brokering dialogue between stakeholders. Mm-hmm. So in this case, traditionally, we would be between the government and the private sector, right? And so, starting there, I think the first thing we realize is that their incentives are different. Yeah. And so, with a quality measurement framework, you can actually align the objective despite disparate incentives. So you may be looking for an improved bottom line. You may be looking for more customer loyalty. That might be your driving, incentive for financial health. you might be looking for more productive people. You might be looking for tax revenue. There's other public policy reasons for promoting financial health. Defining financial health as people have a way to save, they can plan, they can invest. Those metrics are, almost neutral to your particular incentives. So I think that's kind of how we tend to look at it, is not worry so much about aligning incentives perfectly, but having complementary ones, right? And I think a good measurement framework for financial health does that. The one element that is really a place where we need to improve, and we'd love to do more work in this space on that stakeholder side, is bringing customers into that dialogue, right? So we have the private sector, we have the public sector, and there's the other corner of this triangle is how do particularly public policymakers understand that human experience around financial services and how it meets their needs. And in a lot of markets where we work, it's just not as organized as we would like it to be, or it's not directed towards this issue as an advocacy outcome. And so I think there's a real significant opportunity there to align those interests in that way. The public sector to listen to customers more, private sector to participate more actively. And I know, it's great to have Nick on this conversation, because I know the UK kind of has a long history of strong consumer groups, clear messaging. I worked there as a regulator many years ago, and I personally experienced the power of those consumer groups in that way. So I'm curious in terms of your views, in terms of lessons learned. Am I being too ambitious? 48 LDCs, we need UK-like, consumer advocacy groups around financial health.
I think you're absolutely right. I suppose one observation I would make, though, is that, different groups always have a different view of the problem, and lobby groups will obviously always come from a particular perspective, a valid one, but it's, I think one of the things that we're trying to do is to pull together all those different views. So one of the things that we did, for example, in terms of developing the UK strategy, was actually to hold what we call listening events. And we pulled together, I think, 1,000 stakeholders in listening events across the UK, pulling people together from employers, business groups, delivery partners, educators, frontline practitioners, lobby groups, all of them together, and say, okay, what we did was we produced a document which said, this is how we think the world looks. This is based on our evidence, had other people's evidence, and this is what we think the problems are. This is what we think maybe potential solutions are. Come to these events and tell us, what do you agree with? What do you disagree with? Because I think you're right. You want to have that compass. You want to have that, where are we going? But everybody's starting from slightly different points. So I think, I would say over and above that measurement, which, since it's my day job, obviously I think is important, but over and above that is about that co-creation of what is the real problem. If we haven't got people saving or building a savings buffer, why is that? Yes, part of that is around low income or high expenditure, and certainly as MAPS, that's not something we can control. But we know there are other things that inhibit people from saving. If we can get a common idea on what the problem is, we've got more chance of working towards a solution.
Yeah. I think that's a really, really great point, Nick. And something that, we got this question, and I think this is a question for both of you, actually, which is, what are some of the indicators that show you are going in the right direction in your work? And what are the indicators of financial health, right? Because, we're talking about measuring, and how can we align these strategies, making sure that we're measuring if those strategies are in fact effective. But what are some of those indicators that show that you're going in the right direction? Ahmed, do you want to respond to that first?
Yeah, I think this is, honestly, the indicators are less of a problem for us. It's more, can you even collect them in the markets where we work, right? So, simple indicators, how much liquidity do you have accessible in your whatever account? It could be a mobile phone-based wallet or a bank account, but that's relative to your income. Right. Mm-hmm. And so having accurate data on, income disparity and income levels, knowing who you are, and whether or not the amount you have in your bank is sufficient to cover that, are often just frankly data gaps in many of the markets where we work. And what we're hoping, and I'm just going to quickly pass this question on to Nick, is by having really clear indicators, that actually helps us design data systems where we can collect that data in the first place.
Yeah, I think so. A couple of answers, really. I mean, I think the first thing is, yeah, we're lucky. We run quite a big survey. We were able to do quite a lot of analysis on that and identify what things are correlated with financial well-being. And at one level, you could say, well, was it a huge surprise? We came out with, have you got a savings buffer? How much do you use credit? Are you planning for the future? And I think, they're very similar to some of the goals that you've got in the financial health network, some subtle differences, but I mean, some of the domains are similar. I suppose two comments I would make. One is we've, in terms of the tracking from a survey point of view, we focused more on the sort of like the habit of saving. So rather than saying, have you got £500 or $500? Have you got $1,000? Have you got $10,000? We focused on, are you saving regularly? Because if you get macroeconomic change, if you get coronavirus, that can really throw your measurement. So what we've tried to do is to say, okay, something as terrible as coronavirus will stop some people from saving, but it's what you hope is that people will save a bit less. But can you build the savings habit? That's the sustainable thing. I think the other thing that we've done, and it will differ in different markets, of course, but is to say for each of our goals. So our goals are children getting a meaningful financial education, working age people in our struggling and squeeze segments saving regularly, people not using credit for everyday food and bills, not setting advice when they need it, and people planning for and in retirement. And as I said, I don't think any of those people would go, my goodness, how did you discover that? But what we've then tried to do as the next stage is to say, okay, if this is the goal, what are the barriers to it? Therefore, what have we got to overcome? Why is it that some people don't have a savings habit? How much is it about income? How much is it about attitudes and motivations? What interventions can we find? And Ahmed, you use one of my favorite terms, what works? What interventions have helped people to work? And I think one of the other things that we do with measurement is we challenge some people's preconceptions. So one of the things, you sometimes hear is, the reason people don't save is they don't have enough money. Now, in some levels, that's true, but actually you see groups that are on people on low income who do save, and similar people on the same-ish income, similar household composition who do save. So to me, you're going to say, yes, very low income is undoubtedly a problem, but actually it's very hard to fix. Let's now use the evidence. Let's look at the measurement data to see why do some people save and some people don't? Why do some people use credit and people like them don't? What is it? And therefore, we can start to work towards how do we solve the problem. And, for example, one of the things we've identified, and I know it runs in the States as well, is the trials around payroll saving. As part of your, link to your pension contribution or your payroll, a savings pot. Does that work? It seems to. If it does, then we'll want to track over time how many employees either opted in or were opt out of a payroll savings, and why not? And why does it work? And so gradually you start to build, okay, this seems a good idea. How do we make it work better? So I think the measurement isn't just the problem's over there, go and fix it. It's got to be, this is a big problem. This is what we know about why it exists. This is what we know about what might work to solve the problem. And then how do we pull everybody together to work in the same direction?
Right. And I think that the other piece of that, and I know this brings me to you, Ahmed, is this idea of using measurement as a tool to identify what's going well, what's not going that well. And this idea of, you and CDF going from this financial inclusion focus to start thinking about financial health as an outcomes-based approach. Does that access to bank account is really improving the outcomes of the person that has access to that bank account or not? So can you speak a little bit about how you're using now this, financial health approach and how measurement is related in the way that you are measuring outcomes for your programs?
Yeah, it's a great question because it's really an emerging practice. Frankly, as a UN agency, the best tool we have is the SDGs. Not only are they colorful and easy to remember in many ways, there's 17 of them, so it's not easy to remember all of them, but the outcomes are really meaningful, right? People want education, they want clean water, they want better health, they want better access to transportation, they want clean cities. And frankly, I'm a financial inclusion professional most of my career. And it doesn't really correlate as well with meaningful outcomes that the SDGs embody as financial health does, right? Where we're seeing now is by looking at those outcomes, if I have ability to plan, ability to be more resilient in terms of shocks, ability to invest in my ideas, just that resilience innovation nexus between, I am more financially healthy, I can withstand a shock, and I can take my idea to the next level. Those two things, innovation and resilience, underpin the entire objective of the SDGs, right? And so I think for us, really trying to promote financial health is about that resilience, innovation nexus. And the outcomes we look for are really just mapped directly to the SDGs because those are meaningful. Those are what people want. They don't wake up in the morning wanting a bank account necessarily. They want to send their kids to school.
And that makes a lot of sense. And as we start closing the session, I would love for each one of you to share with our US, most primarily US-based audience, one lesson learned from your measurement work based on the strategies that you're implementing. Nick, why don't you share with us first, and then Ahmed, think about your one strategy, or I'm sorry, one takeaway.
Okay, I'll avoid just saying have evidence because that's my day job, as I said. I think for me, the really important thing is to think about how you carry this broad coalition that is the only way we'll deliver improved financial well-being, financial resilience. So I think, you've got to involve everybody from the beginning. We're working with a group of challenge groups to actually say, okay, if these are the goals, what do we do? We're trying to engage people early on. So my learning is you've got to co-create the solutions. Otherwise, it's just another great strategy, a great idea that will be forgotten in a year or two.
Yeah, I think from our end, I love that co-creation thing. I literally wrote it down. I think our challenge is it's a change management problem, right? And we're hoping the measurement component can orient, all the stakeholders around just at least awareness of it being a change management problem. And to steal a little bit from the change management literature, it's not just a singular issue, it's systemic change, it's organizational change, and it's also individual change, whether you're designing products, making policy, or experiencing the services yourselves and feeling like this is just how it is. I'm always over indebted, And so I think really Nick, you did such a great job sort of articulating these different levels. And I think that's why for us, how can we use measurement just to facilitate that change at all of those levels?
And I think I'm sorry, have we finished, Anna?
Yeah, no, close us off.
I was only going to say, I think, building on that, we need to be really clear that it's not going to be one size fits all. So we have to understand, how do we help some of the more marginalized group? How do we help the people on the average income who think they're doing okay, but aren't planning for the future? So I just think that's the other important thing for me, is to get that more holistic view, but understand there are different solutions for different types of people.
Absolutely. And unfortunately, we're out of time. I think we could spend another hour talking about these very important subjects. So thank you so much, Nick and Ahmed, for sharing your work with us today. I hope that we have inspired our audience to anchor their strategies in evidence and measurement.
Great.
Thank you for joining us.
Thank you.
And for everybody else, thank you for tuning in. This concludes our measurement session, but please stay tuned for a few extra minutes. We're gonna kick it back to Josh and Helen for some closing remarks. Thanks, everybody.
Thank you so much to the last panel. That was a great way, I think, to wrap up the day. And remember that there's some perspective to have, that measurement isn't all about maybe the ins and outs, the numbers here or there, but a lot of it comes to what Ahmed mentioned, change management, thinking about how to create those processes that can use the data and turn it into real insights and action at the organizational level. So we're going to wrap up this morning session, but before we do, I am joined by Helen Robb and Alejandra Ruales, my colleagues and senior managers at the Financial Health Network. And I wanted to turn it to them for any takeaways or big ideas that came about to you during the time. So Helen, let's start with you.
Thanks, Josh. I think my biggest takeaway from today was just how powerful measurement is as a tool to understand the macro level, to understand our businesses, and then to understand customers. And for folks who hopefully have been inspired by this morning's session to really think about how they can use measurement in their businesses, I think my biggest takeaway from Tim's session, from Andy's, and from this morning was that really it's all about getting started. Just get moving, think about what your limitations of your data are, make sure that you're connecting them with other things that you're seeing in the world, and then get things moving quickly and iteratively, and make sure that the information is going to the people who can benefit the most from it.
Yeah, fantastic, Helen. Just get started. I love that. Alejandra, any other reflections?
Sure. Yeah. Thanks, Josh. And I absolutely agree with you, Helen. I really love the idea. It was brought up in our last panel about measurement as a compass. And I think that was a common thread throughout the sessions. How do we use measurement to inform our decision-making, inform our products and services, and as a way to guide the industry on where to focus the attention, and as a whole to help us understand if we're moving in the same direction. Additionally, I think these bring us to the idea that financial health cannot exist in a vacuum. It really requires cross-sector collaboration, and to really see if these industry efforts are working, we must measure. I think we said it throughout all of the panels and sessions today, we really can't fix or understand what we don't measure. So I think that's the biggest takeaway from a lot of the sessions today.
Absolutely, absolutely. And I'm like you, that idea of measurement as a compass really stood out to me. Well, thank you everybody for joining us for the morning session here on measurement. We're going to conclude. Hopefully you can join us. We're going to get started back up at 1:30 p.m. Central for our final session that's going to look at strategy and how do we take everything we've been discussing and really use it as the basis for an effective and ultimately viable business strategy for putting financial health forward. So a couple quick notes from a technical standpoint. When we come back, if you are currently on the Emerge Insights webpage, make sure you hit refresh and hit play before we start the next session. If you're watching this on YouTube, stay tuned and we will send you a new link in YouTube chat or via email that you can log into when the next session starts. So we hope to see you all then, and thanks again for joining us. Hello, everyone, and welcome to the fourth and final session of Emerge Insights. My name is Joshua Sledge. I'm a director at the Financial Health Network. And to those of you that have joined us this morning or yesterday, welcome back. And for those of you who are joining us the first time, well, better late than never, and we're glad that you could join us. Thus far, we've examined trends in the financial health of Americans. We've looked at solutions that are coming about to solve some of their most pressing challenges. And we've learned about creating a measurement system that can tell us if we're making the impact we desire. So we're going to wrap today by talking about how to put all those pieces together to create an effective and holistic financial health strategy that can not only move the needle for your customers, employees, and communities, but can also support strong business growth. So before we dive in, I'd like to first take a moment and give a word of thanks to our sponsors, whose support of Emerge Insights has been incredibly valuable, and we really appreciate all they've done to help us make it come to life. So thank you to our diamond sponsors, JP Morgan Chase and Prudential Financial, our financial health sponsor, the MetLife Foundation, our gold sponsors, the AARP Foundation, BlackRock, PayPal, and Wells Fargo, our silver sponsors, Bank of America, Intuit, and Fifth Third Bank, and our bronze sponsors, Capital One, City Community Investing and Development, Marcus by Goldman Sachs, Members Development Company, the National Credit Union Foundation, and Opportune. Thank you again for your support. So before we get started, just a few, of course, housekeeping notes. The chat box on the right side of the Emerge Insights page is a great place to submit your questions or engage in some conversation with your fellow attendees. Closed captioning is provided by the World Institute on Disability. If you'd like to access that feature, there's a link underneath the chat box. And if you're experiencing any technical difficulties, there's a blue icon in the bottom right side of the Emerge Insights page. Click on that, it'll take you to our help desk and we can help you to troubleshoot. Finally, if you have any feedback, let us know. We would love to hear from you. You can email us at emerge@finhealthnetwork.org. I think we've got that link in the chat. Or you can submit any feedback that you have in the chat directly. We're always eager to hear how the experience has been for you and how we can make it better in the future. So let's dive in. We're going to kick things off with a conversation between our CEO, Jennifer Tescher, and Mohammed Khalil of Commonwealth Bank of Australia, talking about what it takes to make the business case for financial health. So we'll turn to them now.
I'm excited to kick off the strategy track of Emerge Insights. Over the course of the sessions yesterday and today, we've heard so much about the great work that's happening around the globe to improve financial health. Implementing these measurement tools and solutions requires companies to invest. With me today to talk about the business case and ROI for financial health is Mohammed Khalil. He's the General Manager of Financial Wellbeing and Applied Behavioral Science at the Commonwealth Bank of Australia. Mo, welcome to Emerge Insights.
Thank you, and thank you for having me.
So you founded the Financial Wellbeing and Applied Behavioral Sciences team at Commonwealth Bank of Australia about 3 years ago. And since then, you've grown it to be a multidisciplinary team that has influence and impact really across the entire bank. Tell us a little bit more about your journey.
Sure. So actually about 5 years ago, Commonwealth Bank reached out to me, and the reason was that they, like every other bank on the planet, had a purpose centered around financial well-being. And if you look at the vision statements of any of the major banks around the world, they all have this core premise around supporting the prosperity and success of their customers. And my background, I spent all of my career really trying to understand this space. And they said, well, why don't you come over, see if there's something that you could potentially help us to do here, because we're really trying to do this and we'd want a little bit more thinking here. So I joined the organization primarily because of the advanced digital capabilities they had, the scale that the Commonwealth Bank has in Australia, and this commitment to purpose. And after about a year and a half of really understanding their capabilities, I was able to get support from the head of the retail bank to begin to build this team. And we started with 2 people, a financial wellbeing strategist and a behavioral scientist. We're now a little bit over 20 people. And the team is originally sat in the digital space because that is where we could have had the most rapid impact in terms of our activities. But over time, we've actually now moved into the group strategy function. And that has been sort of a maturity process that we've gone through, where we started by building capabilities, building toolkits, building evidence base, and starting to drive some innovation. And now that we've got a scaled team operating at the group strategy level to really drive the insights and innovation across the group.
And give our listeners and viewers, most of whom are from the United States, just give them a little bit of a sense of the size and scope of CBA in the context of Australia.
So CBA has relationships with 1 in 2 Australians and is the main financial institution for 1 out of 3 Australians. It is the largest bank in Australia. It actually has a very storied history. It's over 100 years old. Originally was part of the government as part of the Reserve Bank. And then was spun out separately 105 years ago, went public in 1995. and has always been sort of part of the Australian story. So, CBA has been here throughout world wars, depressions, all of the challenges that this country's faced, as well as this recent pandemic. And so there's a very unique role that this organization plays in this society, not just as a private institution owned by 800,000 shareholders, but also as a sense of, as part of the public psyche.
So your team, I think, is different to some of the others that banks elsewhere have established because you've really put an emphasis on science. For instance, you've done many partnerships with Harvard's STAR Lab, you've done work with our Leaders Lab, and you've had projects published in peer-reviewed scientific journals. As we talk about the business case, and that's what this session is about, this sounds like it would take a lot of time and money. Why go to these lengths?
Because it's a lot more expensive if you don't. So, one of the things that our team brought to this vision of financial well-being was discipline. And discipline in sort of the truest sense of the word. Is there a particular method, a process, a way in which we can approach this problem to really drive meaningful impact and change? And when we started to look at financial well-being, what we found was that it lacked a lot of discipline. Lots of really good intentioned people across the bank doing some very good things. But the first thing was that we couldn't measure what financial well-being was and the impact we were having. And the second was that there wasn't a clear process by which we could develop financial well-being solutions. And so bringing science has actually made us far more efficient and far more impactful. The application of the scientific method has actually allowed my team to be able to generate 10x return in a 1-year time horizon on almost every project we've engaged in. Now, it does take some, convincing initially, because we know that teams are operating under constraints from a funding perspective, from a timing perspective, from a resourcing perspective. But once we had a few examples under our belt where we demonstrated that when you bring this discipline of science and the scientific method, most importantly, the how, to the way you approach things, you're actually able to truly be agile. Because we force you to define clearly your hypothesis. We bring the best understanding of human financial decision-making and move teams away from intuitive answers. And then we iterate the solution, proving various points along the way. And what that allows us to do is to pivot away from things that don't work very quickly and pivot closer and closer towards solutions that do work at scale. And as a result, we've done efforts, for example, in the lending space where our impact has generated tens of and hundreds of millions of dollars of impact very quickly because we brought that discipline.
So probably, I'm guessing the very first project was the one that was hardest to convince leaders about. But once anyone would see a 10x return, it must get easier from there.
Yes, and that's also because it's not just about discipline, it's also about courage. So, one of the first projects we did, which is the Harvard Business School case study on the credit card experience, was about bringing greater transparency to credit cards. So we have 9 credit cards at the time, and our Harvard partners said, listen, you visit the page and it tells you how amazing each card is, but that doesn't really tell the customer a lot about what's best for them. And so we started on this journey of saying, let's bring some transparency to our credit card experience by showing trade-offs. This card is great for these types of things. And here's the trade-off. If you don't travel, then you don't need the travel insurance. You don't need these points. Now, to go to a credit card team and tell them, we'd like you to tell people why they shouldn't buy your product is a difficult thing to do. And it took courage on the part of the credit card team to go, you know what? If this is what the science is pointing to, let's test it. It brings transparency to the customer experience. It begins to advance well-being. And when we ran it, what we found was that we were able to increase spend from day one on card by 10%, reduce attrition a year later by 20%, and we reduced the probability of late payments. And so we improved well-being and we drove positive commercial impact. but it took courage initially. And once you have enough people who have the courage to take on sort of this approach, what you find is that others rapidly sort of clamor for the same types of services.
So our efforts around building a measurement methodology and framework were running really in parallel to yours. In fact, you may be slightly ahead of us. And you worked with, I think, with the Melbourne Institute to build your own financial well-being scale a few years ago. Talk to us a little bit about how that scale is being used today and what you've learned as a result of deploying it in the bank.
Yeah, so as when we first started, one of the challenges we had was we said, listen, you have financial well-being as your purpose, and yet we don't have a clear definition, a clear way to measure it. What if we brought the same type of thinking that we have in terms of two other metrics that have visibility for all the way from the front line to the boardroom, and those are ROI and NPS, right? Everyone from the front line all the way up to the top level can find those metrics, understands their impact on the organization, and has clear visibility of that. So, if we want to be able to drive towards this purpose, we need an equivalent metric that has that level of visibility. And let's make sure that it is rigorous and scientific. And so let's work with experts. So we reached out to the Melbourne Institute, and we spent almost 2 years developing this metric. And some of the really interesting things that were unexpected that emerged from it was, first of all, that there were two measures of well-being. We found that there was an observed measure based on data, and that it was related to but distinct from a perceived measure based on survey data. How you feel about your financial well-being is generally aligned against how you're doing, but not always the case. And that level of insight is really helpful because we found that a third of customers aren't feeling in alignment with how they're doing. The second key insight was that because it was a very rigorous measure, we were able to determine what are the true drivers of financial well-being. And what emerged as the most powerful drivers of financial well-being were behavior and, surprisingly, access to government support. And so the fact that behavior was such a big driver, much more important than income. You can make $100,000 more income, but if you don't change your habit, your financial well-being does not change. That insight gave us a lot more confidence in building out our behavioral science capability. And it also gave us confidence that our attempts to nudge people to intervene in ways that change behavior would have a meaningful effect. Ultimately, what that means, though, is that now that we have this measure, which we calculate for all of our main financial institution customers, the 1 in 3 Australians, is that we can monitor financial well-being. So as the COVID crisis has developed, we've actually been able to see what's happening with our customer population on a month-to-month basis. And we've been able to actually share that with government providers and agencies that are really trying to figure out how to best support the community. The second is that we are now able to measure the impact of specific interventions. So given that we apply the scientific method, that we do randomized control trials, we can see that this particular service, feature, solution actually fundamentally change or improve financial well-being. And that's also very, very important because it gives us a sense of how we're progressing. And finally, we were able to show how financial well-being relates to other commercial drivers.
Say more about that last part.
So, if you think about the world in terms of ROI and NPS, ROI and NPS drive fundamental decision-making, throughout the organization in terms of where to allocate resources and whether the solutions that are being designed are meeting customer needs or making them happy. And what we said was, okay, now that we've got this rigorous measure of well-being, does it tell us something different? And how does it relate to these two measures? And so when we looked at ROI through the lens of well-being, what we saw was that financial well-being is a long-term measure of ROI. So where we saw customers' well-being improve, we saw that their ROI improved by 1 to 5x that change. And where we saw financial well-being decline, we saw that their ROI declined by 3 to 6x that change. Now that's specific to our context, and I'm sure every organization will find different correlations, but it really proved to us that, hey, if you focus on well-being, you're actually improving ROI. The second thing that we saw was that when we looked at it through the lens of NPS satisfaction, was that there were very similar correlations there as well, that customers with the lowest well-being were the ones who were least satisfied, and customers with higher well-being were more satisfied. And that sort of brought a third cone to the retina, so to speak, where instead of a black and white world of ROI and NPS, we now had this very nuanced, colored landscape of ROI, NPS, and well-being, where we could identify customer populations that, hey, you may think they're valuable, but actually they're declining in their state of well-being. And if they continue to decline, your profit is at risk. And you may think that these customers are unhappy because of the feature or service you provided, but fundamentally, it has to do with their state of well-being. And if you don't address their state of well-being and just try to make the services more frictionless, more easier, it may not necessarily address those challenges.
So when you talk about ROI, there's a time dimension there.
Yes.
So I think often one of the things that people assume is that indeed improving your customers' financial health may indeed accrue to ROI, but it will take a long time to do so. It's not going to move next quarter's earnings report, as an example. Talk to us a little bit about how you all have dealt with that time dimension, and whether it's indeed true that these kinds of improvements are really long-term plays as opposed to short-term plays.
They're not completely long-term plays. So, if you think about the fundamental drivers of bank profitability, the most immediate is primarily net interest margin on a risk-adjusted basis on your lending side. Then it's net interest margin on your deposit side. Then it's sort of the depth of the relationship that you have with customers. What we've been able to show is that by focusing on well-being, the lending aspect moves very rapidly. Because when you're able to help consumers better manage their spend, better control their ability to save and repay debt, that has immediate value. And we see very rapid results in that space. And that's where we primarily focused for the first year or two. At the same time, we were building experiences that focused on helping consumers build up savings balances, build up those buffers. And so, of course, that has an impact on your ability to generate profit from the savings side. That takes a longer period of time, of course, because people need time to save. Whereas repayments are immediate, due next month, right? Due the month after. And then finally, as we've started to develop a system of financial well-being, because financial well-being is not about individual interventions. It is actually about creating an integrated solution set that helps consumers manage all of the aspects of their well-being. What behavioral scientists would call choice architecture. How do you set up the way that I make choices about how I'm going to allocate spend as it comes in, savings as it becomes available, and debt as I have to repay it. And when you start to build these systems, what you find is that the relationship also deepens over time. That consumers see value in having multiple products with you because they are working together to support that financial well-being system. We're primarily driving a lot of value in that first space on the lending side. We're starting to see the value generated in the second space. And in the third space, we're starting to see signs that consumers are starting to link together and understand that, I shouldn't be thinking about just buying a product. What I should be thinking about is serving my well-being.
That's really exciting. In the same way that you talk about, this is really an integrated system. That we need to think about it that way. It's true that as an enterprise needs to think about its financial health strategy in an integrated fashion across the entire organization. What's been the biggest challenges for you integrating this at an institution the size of CBA, and what are you still working on?
Yeah, there were a few things. One was infrastructure. So, even with CBA's very advanced capabilities, in terms of being able to work collaboratively with our academic experts, because behavioral science is a rapidly evolving field. And if you are working in the space of financial well-being, you're dealing with challenges that have no clear answers. So, just like an aeronautics company would have partnerships with a material sciences division at a leading university, we knew that having this relationship with those universities was important. There were challenges in getting secure data access, ensuring that fulfilled all of our privacy and all of our other obligations. And so that was hard work. So, it isn't just signing up with the university and saying, let's go do some research together. There's a lot of work that goes into getting that made possible. Second aspect of infrastructure was experimentation. We wanted to make it easy for our partners, business partners, to be able to do experimentation rapidly. And that, in the past, would have been a lot of effort. What we've moved towards is what we call zero cost experimentation, building into the infrastructure automated randomization, automated controls, so that when we build a new feature, a new product, it's actually a push of a button, and we can allocate out a control group and a trial group to validate that. So that was the first sort of big challenge, was infrastructure. Second, of course, was working with teams around their constraints. So people have deadlines. Marketing typically has a roadmap of features that they'd like to see out in market. People have KPIs that they need to hit in terms of cost and revenue. And so figuring out how to adapt the scientific method to be able to work in a highly agile way was also a big challenge. And that's going to be specific to every organization. We found our own workarounds, our own ways to solve that, but it took a lot of effort to really work through that so that we could still launch products, but do what we called, for example, encouragement design, where the product is available to all. We may only speak to some of the population about it because they're our trial group. The other population may not have direct marketing associated with it, but if they'd like to find it, they can. And that encouragement design model allows us to run an experiment at scale without creating complexity for the marketing team, where they have to go, well, it's not really out in market. We don't know if we can go out with our campaign. Those were the two biggest, I think, challenges. The third, honestly, is more related to the team, which is it's very hard to find people who have this expertise, particularly in the behavioral science space, because doing and applying behavioral science in a large financial services organization is not something every behavioral scientist is equipped to handle. Behavioral science thus far, up until very recently, was an academic track, and it is now turning into an engineering track. And we just don't have enough engineers on the planet to really drive this forward at the scale that I think we will need to over the next few years.
So many of the people who are listening to this, Mo, are at, in some cases, much smaller institutions. They may be far earlier in their journey. The picture that you've painted of what you've accomplished at CBA is incredibly impressive, but I suspect to folks who are earlier in their journey, it may feel daunting or impossible to replicate. So as we wrap up this session, if there's one piece of advice you could impart to professionals who are interested in improving the financial health of their customers and are really trying to make the business case internally and figure out where to start in terms of building their strategy, what would your advice be?
I would say be part of the Financial Health Network. And that's
it didn't pay him to say that.
No. And that's primarily because I do think that there is a certain scale required to do this level of sophistication. It is very hard work. It does require, and I'm privileged enough to be in an organization that has that ability, the ability to support it at that level. But I also think there's a real importance to creating a community of practice. And I think that's what the Financial Health Network is playing, that critical role of bringing those insights and bringing those proof points and sharing it with the broader community so that more organizations can act on it. We at CBA, for example, through our partnership with Harvard, through our own work in collaboration with the Financial Health Network, are making public as much as possible all of the work that we're doing. Because we know that financial health is too big of a challenge for any one organization to solve. And we know that there are other organizations that have the scale that can continue to build on our insights and add to that insight base. And because we think it is an important way for us to give back to the global community. So for smaller organizations, look for those proof points, look for that evidence. And I think the Financial Health Network is doing a great job of bringing all of that together and making it available in a way that you can act on without necessarily having to try to rebuild these types of capabilities within your own organization.
Mo, thank you so much for joining us today. I appreciate it.
Oh, it's my pleasure. Thank you.
Thank you, Jennifer, and thank you, Mo, for that really great conversation. I think the example of Commonwealth Bank of Australia and the work they've done to really make financial health a core part of what they're doing is extremely impressive and inspiring. Going all the way from thinking about ways to build in discipline of measurement and really talking about courage to move forward on the path that you're setting out for yourself, and building an integrated system. It's really great to hear that those types of initiatives and approaches to building financial health can really be successful in moving ROI forward. So if you're wondering how you could create a similar type of system at your own institution, you are in luck. Next up, my colleague, Marissa Walster, will give you a sneak peek into our efforts to build a map for companies to assess and develop their business strategy for financial health and increase their overall impact. So with that, we'll turn it to Marissa.
Hi, I'm Marissa Walster, Senior Director and Business Strategy Lead at the Financial Health Network. I've spent my career in financial services, and I am excited to share with you our latest research and model to help organizations advance their financial health impact, the FinHealth Map. We are currently faced with powerful reasons for why financial institutions should be stewards of financial health for their customers, employees, and communities. The COVID-19 pandemic and related financial crisis has brought focus to the frailty of financial health in America and the important role that financial institutions play. According to the most recent data from the U.S. Financial Health Pulse, more than 2/3 of people in America were financially coping or financially vulnerable as of August 2020. These individuals are struggling to spend, save, borrow, or plan in ways that allow them to be resilient and seize opportunities over time. But this need for support is not new. From our 2019 Pulse data, we saw that 80% of customers expected their primary financial institution to help them improve their financial health. Yet only 14% strongly agreed that that institution delivered. The study also shows that people who believe their financial institution care about their financial health are 3 times more likely to be satisfied, 3 times more likely to recommend that institution to family and friends, and 5 times more likely to be interested in holding additional products. Financial health is good for business too. So why isn't every financial institution focused on improving financial health? In part, it is because this requires a transformation in how organizations think about operating their business, a shift from business-only outcomes to business and people outcomes. Financial health is not unlike the risk management transformation that stemmed from the 2008 financial crisis, or the digital transformation driven by changing consumer expectations for convenience and access. These required a holistic approach, changing goals, perspectives, processes, in coordination across a business. Transforming a business to make a real impact on financial health is no different. We know that the path for each organization will not be the same. They cannot be, for just like each of your customers and employees, they have histories, goals, circumstances that are unique. But that does not mean that this journey to build financial health must be a journey into the unknown. With the goal of making the business strategy of financial health understandable, practical, actionable, and sustainable, the Financial Health Network, with funding from Flourish, a venture of the Omidyar Group, began researching and developing a model for building financial health strategies, the FinHealth Map. We leveraged our years of experience and worked with our vast network of members to identify proven in-market and advanced best practices. And while we've started with financial services, the map can be applied more broadly, and we have our sights set on deep dives for other sectors too. Through our work, we identified 4 common elements of a mature financial health strategy. Vision, the understanding of and commitment to sustainable financial health impact. Infrastructure, existence of resources, capabilities, and internal structures to support that financial health impact. Performance, accountability to design solutions that improve financial health. And solutions, delivery of these solutions that support and improve financial health for all. For each of these pillars, we identified key activities that should exist within an organization to increase impact and sustainability. Take vision, for example. Financial health should be in the organization's mission statement, seen as a value driver for the business, understood by all employees, and promoted internally and externally by executive leadership. We can look at the depth and breadth to which these activities exist to assess the maturity of an organization against each pillar, from initiating to optimizing. One of the most important factors in determining maturity is how broadly financial health is integrated across an organization. So often we see financial health impact start through the efforts of one internal champion, or be adopted as a mission of a social impact team. And this is critical and impactful work. But organizational maturity grows when teams and leaders from all corners are driven to impact financial health together. At a financial institution, these should include product teams, customer experience groups, marketing organization, human resources, and community engagement teams. For one organization, this started with marketing, measuring financial health to inform their segmentation strategy, which led to product teams designing features to improve credit, and the integration of financial coaching across customer experience channels. For each organization, the path may be different, but impact is greater when all of these pieces work together. With a FinHealth map, we hope to provide a map for organizations to identify ways in which they can mobilize internally and increase their impact on the financial health of all those they touch. So where is your organization on its journey? And what are your next steps for impact? The FinHealth map can be your guide. In our forthcoming paper, we dig into the details and provide case studies that show how a number of companies are bringing their journey to life. We hope that you will stay tuned to hear some of these stories in our next session. Then please get in touch. Tell us about your journey and let us know how we can help you take the next step. We are looking forward to improving financial health for all together. Well, welcome back, everyone. I'm Marissa Walster, Senior Director and Business Strategy Lead at the Financial Health Network. As we continue to explore the why and how to build a business strategy around financial health, I am thrilled to welcome my three guests today to discuss the very journeys that they and their organizations have been on to advance financial health. We have Bahari Harris, Vice President of Community Banking at Bank of America, Matt Holton, Senior Manager of Social Innovation at PayPal, and Jody Wigley, Senior Vice President of Customer Programs at Regions Bank. Welcome to Emerge Insights, gentlemen. We have so much to cover, so I'm going to jump right in. Jody, I'd like to start with you. Regions has a long history of supporting financial education. And more recently, you've really been a driving force behind expanding that to financial health measurement and using that data. Tell us a bit about sort of why financial health at Regions and sort of how that strategy has evolved.
Yeah, absolutely. And Regions has been committed to financial education for a very long time. Our Chief Marketing Officer, Michelle Elrod, our Head of Retail Bank, Scott Peters, they really curated, great articles, seminars, podcasts, and partnerships with some of the best content around financial health. It was all around a mission to help customers make better financial decisions and improve financial health. In a previous role, I was responsible for the program that took those seminars and we would deliver them to the branch small business and commercial clients. And we were doing 80,000 to 100,000 seminars per year. Some of those seminars might include how to improve your credit score or first-time home buyers. But we were always struck with a challenge, and that was an answer to the question of, what do we do well and how do we know? Well, we thought we were doing financial education extremely well. We had the articles, the content, the seminars, we had the rigor around going out and doing the presentation, but how did we know we were moving the needle? So Michael Sear, who many of you at the Financial Health Network know and love, introduced me to Darren at the Financial Health Network, and he showed me the financial health score, and it just sort of clicked. This is how we're going to know. This is how we're going to know if we're improving lives, if our seminars, our education, our tools and technology are actually moving the needle. So after coming back from an Emerge conference and being really excited about the financial health score, the measurement tool, it was all about building a coalition and a process. And so I would say Michael Sear and I became the financial health score evangelists. We went out and we shared the mission. We tried to create a narrative that was compelling. We shared the business case, and we really tried to build a community. And so to your question about who was the first at Regions to really take hold of the message, really it was our research partners in customer insights and analysis. They saw that as an opportunity to learn about our customers. It was our customer experience group that understood that we could do transparency by helping customers see where they stood in the financial health journey. And it was our marketing team, specifically our messaging team, that really thought this is a differentiator. We can truly help measure our customers' financial health and create that shared value that benefits both the customers and the communities. So I will say it's been a long journey, and we're really excited about where Regions is right now in that financial health journey process.
That's great. I think we hear a lot about sort of the different places that organizations start. And certainly you sort of started talking about leadership's involvement. And so Matt, I'd really like to sort of pose a question to you. At PayPal, your CEO, Dan Schulman, I think if anyone follows financial services, has probably heard him talk about financial health. How has having a executive leadership sponsor like that in an organization really affected how PayPal views financial health and how it operates?
Yeah, this is definitely a topic that Dan is very passionate about. And when he joined as CEO about 6 years ago, the mission that he and the executive team set for the company was for us to democratize financial services and ensure that everybody is able to participate in the global economy. So financial health is core to the strategy, which means it's not driven by one particular person or team within the company. It's brought to life by functions throughout the business. What that really enables is innovation to bubble up organically. So teams are empowered to use the tools and information at their disposal to recognize when there's issues and take action. So to give an example, a few years back, we had several teams that recognized that small businesses were having issues getting access to capital. So they came together, they used PayPal data to build PayPal Working Capital, which essentially allows small businesses to get access to funds and repay based on a percentage of their PayPal sales. So that started out as a pilot. It has now grown into over 15 billion to small businesses, and a lot of those funds are going to businesses and locations that have lost a large percentage of brick and mortar banks. Another way that this kind of model or approach comes to life is it allows us to collaborate and mobilize when our communities need our support the most. So during the pandemic, one of the things we were able to do is bring teams together to make quick decisions. So making decisions to do deferment of payments and waiving fees, but also we worked closely with the federal government to ensure that we could get stimulus dollars in people's hands as fast as possible. In addition to that, we really focused on how we could support underserved communities. So in June, we made a $530 million commitment to Black and minority communities who were particularly impacted by COVID, but also dealing with ongoing social inequality issues. And honestly, I don't think that would have been possible if we didn't have the strong commitment from leadership and alignment across the business.
Yeah.
One of the areas that we feel like we're needing to still do more is how do we get to the point of having kind of a common language as a business and having common metrics so that we're all pushing in the same direction. That's a part of our role as the social innovation team, is to partner with different teams throughout the business, help them identify and measure financial health of customers and employees, and then identify opportunities for us to be doing more to drive impact. And then ultimately, we want to get to the point of being able to set those overarching goals that are allowing all of our kind of combined work to go towards the same purpose.
Mm-hmm. I mean, it sounds like collaboration is really sort of key for all of that.
Essentially.
Bahari, at an organization like Bank of America, which is large, I think, by anyone's standards, right? You have hundreds of thousands of employees all across the US and the world. Like, how does a financial health strategy get communicated? And how do you create that sort of collaboration across such a large organization?
Sure. And Melissa, thank you for those questions, and allow me to briefly answer by connecting the two themes that you raised in your questions with a single phrase. And that is, unless we all own the company's strategy, it's not going to get communicated well. So at Bank of America, we are guided by a common purpose to help make the financial lives of our clients better through the power of every connection. And Bank of America is committed to helping our clients and communities to become more financially resilient. Through our community banking strategy that I have the privilege of leading, we bring together all of the bank's capabilities to connect our clients and our business owners and our communities to our tailored products and services, our entry-level jobs and capital to increase financial resilience and to help our local communities thrive. You know, we believe that when clients and businesses and communities are made stronger, we all benefit. So let me drill down to your question about communication in three primary ways: strategic planning, partner routines, and reporting. So when we think about strategic planning, we started our community banking strategy by visiting a number of our financial centers across the retail network that were serving mostly clients that were from low to moderate income backgrounds. We conducted a listening session, right, with our clients. We really wanted to figure out from our clients, what were we doing well and where did we have opportunities? Afterwards, we established a framework of financial behaviors that were frankly informed by you over at the Financial Health Network, that outline exactly how we should address the unique needs of our clients, while making sure that our associates in those centers receive the training that enabled them to have not just the knowledge, but the resources to be able to meet our clients and assist them with their short-term and long-term financial goals. Secondly, partner routines. So I lead a biweekly call that gathers stakeholders critical to driving the community banking strategy. These calls are a way for us to frankly listen to and learn about how financial health concepts are being implemented across the enterprise, particularly in product and marketing and in the lending spaces. And thirdly, reporting. To Matt's point, right, we have to create a common language. So on a quarterly basis, my team coordinates with 40 different partners to collect specific performance metrics, right? And then we deliver these quarterly to our investors, our board, and to our executives. And this reporting is a tool not only to communicate performance, but also to introduce a common language around community banking that really speaks to leadership. Let me close with a thought here. How we position the community banking strategy with all of our internal and our external stakeholders will ultimately determine just how transformative it'll be.
Yeah, I think that's a theme that we hear talking to many of our members. So that consistency, that infrastructure and process in place is really important. You make it sound relatively easy though. So I'd like to hear what is one of the challenges that you faced in communicating and making sure that there is this sort of well understood strategy.
Yeah. So, let me pick up right where I left off, right? So how we position the community banking strategy with our internal and external stakeholders will ultimately determine just how transformative it can be, right? If we only talk about financial health as it relates to low and moderate income strategy, then it will ultimately become pigeonholed. So financial health must be seen as a value driver across client segments, across product types, and marketing initiatives. At Bank of America, we also believe that the client is at the center of everything we do, right down to how we design products and services based on a client's life plan and their financial needs. So in the community banking space, we focus on offering products and services that really set the foundation for banking for a client's entire financial lives, and really solutions that impact their financial behaviors, right? And so let me offer 3 examples. First of all, our Bank of America Advantage Safe Balance Banking. That's a really fancy name for our checking solution that prevents overdraft fees, right? So this is good for low balance clients, but it also includes students. It's a great option for students. This account, by the way, is certified by Bank On as being a fantastic option for those who are new to banking. Secondly, our Bank of America Secured Card that helps clients to build and strengthen their credit. This has implications across client segments, right? Any client that is establishing or rebuilding credit can benefit from this particular solution. It happens to be one of my favorite products because it directly influences and informs healthy credit behaviors while setting up kind of a graduation type experience. Thirdly, Keep the Change. It's a savings program that helps clients to build savings automatically while making everyday purchases with their debit card. It really presents a benign approach to savings for any client that wants to save, but doesn't feel like they have enough money or the discipline to. So, to close, positioning really is of utmost importance in terms of how we think about some of these challenges.
Yeah, and I think what I sort of got out of that is the coordination across the different products and the different business units is really important. Jody, I know that at Regions, you have an Underserved committee. Can you talk about what that group does, who it is, and how it serves the financial health strategy?
I agree with my colleague at Bank of America that financial health is the right tool for all customers. It is a value differentiator. It's the right thing for a bank to do to understand and help people along the financial health journey. At Regions, we have a committee that we stood up focused on the underserved. This is a senior executive-led committee. It has our head of products, head of digital, it has our public relations, it has the leaders of our branches, a cross-functional team across the bank. And what we found is that about 30% of the customers in the region's footprint would be defined as underserved, so either unbanked or underbanked. And at Regions, we wanted to create an environment of financial inclusion. We wanted to make sure that we had the tools and the technology to help all customers. And so we created this underserved committee where we come and we talk about the needs of this customer segment. We challenge ourselves to say, are the products, the buildings, the process that we have, are we creating an environment of financial inclusion? Where the financial health score has really helped this conversation is it's another voice of customer data point. It's a place where we can understand what the customers are struggling with, particularly during a pandemic or other life struggles that they might be going through. Recently, as August, we actually took the financial health score and we put it into a customer-facing tool we call Greenprint. And Greenprint is just an opportunity for a customer to come into a branch, have a meeting with a banker, and really understand what is their next step along the financial health journey. And so I'm really excited about that step. So again, it will apply to all customers, but our underserved steering committee is especially focused on those products and innovation like down payment assistance for our mortgage, deposit secured lending, our prepaid card, Western Union, other products, services, advice, guidance, and education that would be specific to that group. And again, the financial health score and the data that we're pulling out of that is going to help inform innovation in the future.
I mean, at the Financial Health Network, we are strong believers in the power of data. And so I'd like to dig in a little bit more there. Matt, I'm curious to hear, I know that you at PayPal have been measuring the financial health of your employees. How have you sort of gone about that process, and how are you using that data and sort of holding yourselves as sort of accountable to advancing financial health there?
Yeah, we have been addressing employee financial health for a while, but it's certainly picked up in urgency over the last couple of years. And our journey has been an interesting one. In 2018, we conducted a survey of hourly and entry-level employees, and we found that 2/3 of our employees were running out of funds between paydays. So even though we were paying at or above market, they still didn't have enough to make ends meet. So we undertook this process of trying to understand how much do employees need in order to be able to support their financial health. And so at the center of that is a calculation called net disposable income, which is essentially what's left after they've covered taxes and essential living costs. And so from there, we did an assessment of what does it look like in different parts of the country, in different parts of the world. And we found that for entry-level employees, in some areas, we had NDI that was as low as 4%, which was obviously disappointing. In looking at where employees needed to be in order to be able to handle short-term, all their responsibilities in the short term, but also start to put funds away for their future, how much did they need? And we felt 20% was the right target. So in order to get there, what we did was put a series of actions into place. So we lowered the cost of healthcare expenses for hourly and entry-level employees by up to 60%. We made sure that everybody within the company is a stock owner and is eligible for stock awards going forward, regardless of level or tenure. And we made wage adjustments where it was appropriate. And then in addition to that, we put counseling services in place to really provide individualized support for employees. And what we've seen from that are some positive results. We're on track to hit 16% NDI by the beginning of 2021. And we have plans to accomplish that goal, the 20% goal, within the year. And then we've started to see other early indications, other positive indications. We've seen a reduction in the number of people who are running out of funds between paydays. We've seen an increase in employees investing in things like 401k, upgrading their healthcare plans. So we're optimistic about those results, but we also are still looking at this in the spirit of evolution. We need to continue to listen and learn, and we plan to implement new measurement tools and initiatives to really support employees along their journey.
Mm-hmm. I'd really like to ask kind of a question to all of you, which is, what's next? You all are thinking very strategically about how to have financial health impact and how to integrate it across your organization. So maybe Jody, I'll start with you. What's next for you all? And how do you advance your impact on financial health?
I think much like the other panelists, it's about creating that common language and that common culture toward improving financial health. You know, we use the phrase creating shared value, something where our customers, our community, and our bank would receive the benefit. So for what's next for us is taking the data and the insights, potentially creating some clusters that we can apply to all of our customers so that we can then do some personalization to help improve the financial health. So how can we go and have a one-to-one conversation, a financial health coaching conversation, and really focus on improving that performance, taking transactional data and the financial health score and combining it to have a holistic view of our customer. And then just keeping that passion alive within the bank, understanding the mission around improving financial health and how important that is and how transparent we need to be with our customers that we are here to help.
Mm-hmm. Bahari, I'll go to you next, because I know you mentioned a number of products that you have out in market, and you just launched 2 more, Life Plan and Balance Assist. So what is next kind of on this journey for Bank of America?
Yeah, Marissa, first of all, thank you for recognizing the launch of these 2 new client solutions, Life Plan and Balance Assist. These are huge for us, and you are correct. These will help to advance our financial resilience and strategy, and particularly as it relates to our spend and borrow and plan financial behaviors that we're all really familiar with at the Financial Health Network. In fact, Balance Assist joins our collection of what we are calling safe financial solutions for our clients, many of which I just named before: Safe Balance, Secure Card, Keep the Change. But also there's our affordable loan solution for home buying. All these solutions combined are empowering, simplified, and safe ways, right, for our clients to bank confidently while building their financial health and their financial resilience. The new Bank of America Balance Assist product won't be officially available until early next year. So in terms of next steps, to get really tactical, with the launch of any new product or service, we want to evaluate, how clients will adopt and use the product. And then we want to take what we learn from them to inform our future enhancements to better meet their needs, right? Our goal at Bank of America is to be proactive rather than reactive to the financial priorities and goals of our clients as they build their financial resiliency.
That's great. And Matt, I'll pose the same question to you. At a company that feels like it is well organized around financial health and has all this buy-in from the top, kind of what's the next step for you all as you think about creating this language that carries across the organization? Like, what are the next steps for PayPal?
Well, I think, similar to what Bahari was sharing, I think we're looking at ways of being proactive, and we're looking at ways and we're starting to look outside of our own walls. So we're starting to look at ways that we can partner with and work with other organizations and other companies. We really feel like in order for us to build an economy that really works for all Americans, we need a critical mass thinking about things like employee financial wellness. Mm-hmm. So we actually have formed a new initiative called the Worker Financial Wellness Initiative in partnership with Just Capital Financial Health Network and Good Jobs Institute. And the goal is for us to bring corporate leaders together, for us to have discussions on this, but also to share tools and resources for how other companies can start to think about, doing wage assessments and financial health assessments with their own workforces. And then to start to draw some of those connections between what we see with worker financial wellness and corporate performance, and how those two things are connected.
Mm-hmm. That's great. We've got a question from the audience for Bahari. If you could maybe sort of quickly touch on the Keep the Change program that you mentioned. How does that work?
Yeah, so another one of my favorites. They probably are all on my favorite list, but it's where you use your debit card. You go and you make a purchase, and let's say that purchase is, I don't know, $5.75, right? We round it up to $6, and we take that 25 cents and store it away in your savings account, right? So again, it's a really benign way to build your savings, and to see it just kind of creep up without really missing, the quarter that we moved from your checking to your savings account.
Mm-hmm. Thank you. Jody, I'd like to sort of leave you with to close us out here, with the question of, if someone was to get started, building a financial health strategy within an organization, what's a piece of advice that you would give them? Where should they think about starting?
What I would say is find someone who has passion around the progress. Find someone in your organization that wakes up every morning passionate about financial health, and then use them as the catalyst to win others over and start building a network or a community around a common language. At Regions, that person has been Michael Sear, and he's really done a great job of getting financial score, financial wellness into multiple conversations around the bank. And so that would be my recommendation.
That's great. Well, I want to thank you all for joining us, and for all the work that you're doing to advance financial health at your organizations. And I think hearing these stories certainly lights up so many ideas in my head about kind of the types of work that can happen within an organization. I think it's really helpful for our audience to hear about the varied ways in which these things can come to life within an organization. So up next, the Financial Health Network's own Chief Marketing Officer, Laura Barger, was going to be moderating a session with guests from J.D. Power and Edelman, which you may know from their Trust Barometer. And they will be exploring the connection between financial health, customer satisfaction, and trust. It's sure to be really insightful. So please stay tuned. We'll be back with you in just a moment.
Good afternoon, everyone. I'm Laura Barger, Chief Marketing Officer at the Financial Health Network. Thanks so much for joining us today. I'm really excited to be closing out this terrific day of content with a discussion on consumer trust. Over the last few hours, we've been hearing a lot about action, right? About things that organizations can do around financial health, whether it's measurement, paying attention to data, and it's such a critical component to how consumers view organizations, like what they're actually doing on behalf of the consumer's best interests. Over the last couple of days, we've been talking a lot about the data that we published recently from the 2020 US Financial Health Pulse Trends Report. We also do deeper dive studies throughout the year that leverages that data to really look into certain trends, to certain opportunities or demographics. And we recently published a study based on our 2019 data showing a really strong correlation between whether customers believe their bank or credit union or financial services organization is supporting their financial health, and their and how that relates to their satisfaction, to their willingness to recommend the organization to a friend, and their interest in either exploring or holding additional products. The narrative that really brings these points together is trust, and trust that an institution has the consumer's best interests in mind, particularly during a time when things like data access and privacy are huge topics of conversation. This is a really interesting topic, in particular during this time of the current pandemic and the economic climate, when institutions, notably financial services, have been called to help with things like stimulus planning and disbursement, as well as debt and payment relief. The idea of trust and how it plays into consumer consideration is not actually new. And there are several organizations that specifically focus on measuring and analyzing trends in consumer trust. So I am actually delighted to be joined today by two guests to discuss specifically how financial institutions can build strong consumer relationships and the role that trust in financial health plays. So I'd like to welcome Deirdre Campbell, who is the global chair and head of the U.S. Financial Services business at Edelman, a global communications firm and the organization behind the Edelman Trust Barometer, and Bob Newhouse, who is the practice lead for global financial services at J.D. Power, a company synonymous with the customer satisfaction ratings across industries. So welcome to both of you to our closing session of Emerge Insights.
Thank you.
Awesome. So I just want to kick right off by acknowledging that both of your organizations have long-standing approaches in measuring consumer relationships to businesses, with financial services organizations in particular. So I'd like to actually ground us with just an overview from each of you on how your companies go about measuring trust, as well as any notable changes in the trust that you're seeing in financial services institutions, particularly coming out of this year. Deirdre, let's start with you in talking a little bit more about the Pulse, the Trust Barometer.
Yeah, thank you. So the Edelman Trust Barometer is on its 20th year of global research. It is research that looks at trust in government, business, media, and NGOs with 33,000 respondents across 28 markets. The research takes place every year. It's in the field middle of November through middle of December, and it's launched at the World Economic Forum on the opening morning and really sort of used as guideposts throughout the week to guide conversations about the state of trust around the world. We look at trust in countries and trust in sectors as well. By the spring, the sector cuts come out, and I get busy with the financial services sector cut, really looking at trust in the sector and looking at what trust building looks like so that we really have actionable insights to work against. But this year, we launched it in Davos in January, and by the time we got to March, it was completely irrelevant. The world had turned upside down, and everything that we had been measuring didn't seem to matter anymore. And we wanted to rush right back out into the market and start understanding what really mattered to people. And so fresher data came back, smaller data set, 11 countries and 13,000 respondents, but just in order to move quickly. And we saw a significant rise in trust in the financial services sector. So the financial services sector has always been the least trusted sector of all the sectors that we measure, but now it's jumped quite significantly. It has jumped 5 points. Well, it has been 6 points for global financial services and 5 points for banks. And we began to sort of ask ourselves, sort of, what do you think that's all about? In understanding the trust results, we look at the headlines in those markets at the time in which the research was in the field, And we were really seeing financial services playing the role of economic first responders, in the, kind of in the trenches on PPP, whether it was going well or not, they were sort of there and performing that role. We saw, auto insurers giving back premiums without even being asked because people weren't driving around in cars. We saw lenders giving loans ahead of stimulus checks. And we also saw a financial services system quite different from that suffered the global financial crisis, because the stress tests and the regulations put in place seemed to be holding up and giving us markets that were more liquid and more able to support sort of in those early days. I mean, since we've been hearing, a lot of money going to a lot of issues, but is the real work getting done? So certainly there's still work to be done, but we're trending in the right direction, at least according to the Edelman data at this moment.
Interesting. And so, Bob, I'll turn it over to you. I know that you field supplemental research here too, and in sort of the conversations leading into this panel, it seemed that you saw something a little bit different. And so I'd love to get a sense from you, like how you field the data and what you've been seeing in particular during this year.
Sure. Historically, we've been in the market on a quarterly basis, measuring satisfaction, NPS, and trust. And as soon as the pandemic hit, we recognized the need to do that even more frequently. And for a number of months, we were in the market biweekly measuring these elements. Since March, we've conducted approximately 100,000 interviews in the US, measuring satisfaction, trust, financial or behaviors that consumers have had in response to the pandemic, and measuring their financial health. And what we saw that is similar to what Deirdre just described is we saw a bump up in the performance metrics, including trust, immediately after the pandemic hit, but it then subsequently fell off. So I think that customers were very appreciative early on to be able to get through to their bank, even if it took a long time on the phone, for example. But then as the summer wore on, I think we're seeing an element of fatigue setting in and frustration. And I think that's caused the numbers to come down a bit. The other thing that we're seeing is a bit of as you heard in the media, the K-shaped recovery, where those who have strong financial health are continuing to give positive responses about the banks. And those who have poor financial health, which is a growing population, are increasingly critical of the banks. And that plays out whether it's satisfaction or trust or loyalty. So we're seeing pretty complex dynamics with that.
So that's really interesting. And I would say that in some ways it mirrors a lot of the things that we saw coming out of the Pulse Trends report, which is that the improvements that we're seeing and some of the hypotheses around that is that moments in time, right? Stimulus kicking in, giving people a momentary sense of stability, but the equitable kind of financial health issue is starting to see the chasms are widening a bit. So I think, what I'd like to, and I'll stay with you, Bob, on this one, just because I feel like it's a good continuity to what you were just talking about, is that to me actually speaks to what is the short game versus long game, right, for financial health when it comes to how banks and financial institutions deploy it as a strategic pillar in their organization. It's interesting that Deirdre called it a first responder moment, but first responder versus long-term, like resilience and care, I would think would be a significant point for institutions as they're thinking about their financial health strategy. So from your perspective, what do you think needs to happen now? Like how do banks and institutions deal with the fall off in the trust? And what are some of those key things that organizations need to take into consideration so that it doesn't end up being an incredibly detrimental trust situation?
Sure. I think how you measure bank performance really depends on where you set the bar for the banks in the industry. And if the bar is set on the basics, like keeping my money safe, giving me access to it when I need it, the banks are doing a really solid job of those basics. The basic functionality of digital is strong. But as the population of people who are having poor financial health increases, the need for banks to step up to that challenge is critical. We hear a lot of talk in the industry. There have been some new tools introduced that support financial health, but I think we're in the very early stages as an industry of truly supporting the financial health of customers. We, for example, have found that 80% of customers are looking for advice and guidance, but just roughly 30% are getting it. So an enormous gap between the need for financial advice and guidance and what people are getting. They're desiring that more and more through digital channels, and that's still not playing out in the industry. So there's a lot that needs to be done there. I think financial health should be thought of more as white space for banks to differentiate themselves, whereas the more traditional way of thinking about banking, getting the basics done, is really the table stakes. So as you look forward as an industry, this is a great opportunity to do something different that's very much needed by the population.
That's great. And Deirdre, I want to turn this similar question over to you, but with a little bit of a twist, because I feel like in particular, one of the things I've been thinking about is how does this year, how has it affected the way that we actually think about these surveys, right? Are we asking the right questions? Do we think we're getting the real sentiment from people? Has Edelman given any thought to sort of how the questioning might change? And what do you think maybe changing some of that data and going deeper into these areas of equity might affect the study moving forward?
So there's a couple of answers to that question. Kind of on the first piece of it, are we thinking differently about it? Not in some respects, because we're always looking for the actionable insight. So not just the state of trust, but what does it mean to financial services companies and how can they help improve trust? And so alongside just kind of the benchmark questions that we want to know in terms of the state of trust, we went back into the market in September to really try to understand how people were feeling about what it was going to take to get through the crisis. And the focus of that research was everything, how are the sectors going to help people get through the crisis? And interestingly, of all the sectors that we surveyed, financial services came out again on as number one in terms of the sector that consumers expected to help get them through this crisis. And then we asked them to sort of rank order what it was specifically you're looking for from the sectors. And it was accessible to information. It was affordable products and services. And it was protect the safety and well-being of me, my employees, my community, and my customers. And what was interesting about that is not only was financial services at the top in terms of the expectation, but also had the largest delta between how much the world expected these things from the sector and how well they thought the sector was doing. So that really uncovers for us, areas that our clients can go back and work on and kind of ask themselves and measure themselves against. Are we doing everything to protect our communities and employees and customers? Are we making products accessible? And really thinking about it in innovative ways. I love this announcement that came out yesterday from Greenwood and Killer Mike, and the products that the company that they're rolling out to help eliminate payday lending, and which is really sort of snags the most vulnerable, and so really sort of in ways that are sort of unthinkable. So we look at it in terms of actionable insights. But then you asked if we're digging deeper or doing more. We have launched a new product called Edelman Trust Management. We launched about a year ago, and now it's turning into a suite of services that allow companies to undertake bespoke research about how well they're trusted across ability, dependability, security, and purpose, and then measuring them against their competitors, and again, giving them a benchmark and also giving them metrics to measure themselves against, really trust-building metrics that they can take into the boardroom.
That's interesting. That actually leads me kind of into the next thing that I wanted to ask about, which is, when these insights become available, right, to industry leaders and to the organizations that you speak to, I'm assuming that generally the feedback and the discussion that comes out of seeing this data is pretty consistent year over year. What do you feel like they're going to, how do you feel like leaders and sort of strategic owners are going to take this year's data? What do you think the general reaction is going to be? And do you think it's going to be any different? Or do you think you're going to see any different action? I'll start, Bob, with you on this one.
Sure. I think the topic of financial health has grown in importance this year. And I think it's also in the context of a changing business model. As employees are now working from home instead of working in large contact centers, as digital has grown dramatically. Digital was already growing dramatically, and it accelerated at a much faster pace. The population of unhealthy, sort of from a financial point of view, customers is getting a lot of attention. I don't think the solutions have been put in place. I also think that as we talk about financial health, you also need to consider the topic of financial literacy at the same time. And we recently measured that and asked the most simple questions that come from academia on this. And 55% of pre-boomers and boomers passed these 3 questions. Just 9% of Gen Z passed those questions. These are questions about what is inflation, how do interest rates work, and what is stock diversification. These are urgent issues that need attention from the banks. I think they're applying that attention. But as I said, these solutions are in the kind of the early stages of impacting the marketplace in a significant way.
Deirdre, how about you? Any thoughts on how you'll see any differences in reaction or conversations that you think will come out of this?
So I'll walk back to that in a couple of ways. As it relates to financial literacy has been a huge problem in this country for decades. You know, not understanding the power of compound interest, it puts you right back into the have and have nots category. And I think there are organizations, many organizations that are taking it on. I'm proud to work with the Council for Economic Education, who's been around for 65 years, and they come up with they create the curriculum to give to the teachers K through 12, because financial literacy is not math. It's a different thing. And teachers, if they can, going to be given this curriculum and trained, they can help. Employers also need to be undertaking financial literacy initiatives and helping them teach their employees what to do with their pension savings and their retirement savings, and thinking about your financial security big picture, and looking at retirement and the importance of saving early. And in terms of sort of counter to Bob's point on digital, I think that digital banking products have obviously been around for a very long time, and they've been very good in many respects. And I think that people, if they didn't use them, they had to start using them overnight, and found that they stood up pretty well. But I also think that, and when we see some of the trust numbers getting wobbly, particularly in Bob's data, is the lack of human touch. Have we tipped to, you're not going to the brands, you're talking to chatbots more. The product does more for you, so there's less of a human connection. So always sort of struggling to find that right balance. I was on with a financial securities provider the other day and talking to a chatbot, and the chatbot said, I'm a little young and my algorithms aren't quite there yet. Let me transfer you to one of our friendly humans. Like, it just, instead of putting some personality into the brand and into the technology that makes people feel like there's still someone on the other end there for them.
It feels like that would be particularly poignant, I think, in this situation, right? Just to the point of, hey, it took me a long time to get through to somebody at my bank, but I did get through to somebody at my bank. It almost feels like we've, I don't want to say reverted, but there's a certain kind of comfort in knowing that you're connecting with other people, especially during a time of kind of volatility and crisis. That's been pretty interesting. Well, we just have a couple more minutes. I did get one audience question that it takes us in a slightly different direction, but I'll just throw it out there and see if we have a couple of words on it. Is that obviously what has happened during the pandemic and the response to the pandemic has been significant this year. But generally speaking, where do we also see the role of how institutions are showing up in terms of philanthropy, and how they're showing up in terms of public relations and sort of their overarching brand? Do you think that those elements have been influential in trust this year, or have they really been sort of pushed to the side a little bit more, just given the attention that people are paying the kind of first responder type of characterization of the institutions? And I'll leave it with Deirdre for this one.
Yeah, it's interesting. I mean, when the crisis first hit, you would see companies giving $5 million and $10 million, and all of a sudden that looked like a tiny amount of money, and then it was $130 billion and upwards. Certainly, I think that the financial institutions have rushed to support through the Black Lives Matter, supporting Black businesses. I love the work that you guys did with PayPal on the employee financial health and some of the other stuff. You see some of the fintechs and you know, the institutions with big dollars, but now I think it's important that they go in and stand up the programs. We always say you can't do the telling, you have to do the doing. And it's time to get busy with the doing so that we have a long-term systemic effect and can support greater financial security ahead.
Yeah. And Bob, any final thoughts on that?
Yeah, I would just add, we've asked people to evaluate their bank on their COVID response and gotten into some of the specifics about what has impacted that response. And not surprisingly, based on what you're just saying, that the support of the community, the support of the employees, that type of thing is resonating strongly with consumers and means something to them.
Great. Well, again, I want to thank both of you so much for joining me today. I think this is a perfect way to close out the conversation and all the key themes that we touched upon. So much appreciated, and I hope you have a great afternoon.
Thank you for having us.
Thank you.
Okay, bye.
Thank you, Laura, Bob, and Deidre for that fantastic conversation to wrap up our session today on strategy. I think now more than ever, it's clear that providers really have an opportunity to show how committed they are to their customers or clients in financial health by addressing some of the challenges they're facing in this once-in-a-lifetime pandemic. So thank you again for wrapping up our session today on strategy and incorporating strategy into your overall business model. So I wanted to end the day today. I'm glad to have my colleague, Rob Levy, our VP of Research and Measurement, and wanted to ask Rob not only any feedback about the day today, but about our time at Emerge Insights over the last couple of days. He kicked things off asking us some pretty interesting questions. I'm wondering how you're feeling about them today.
Thanks, Josh. Firstly, thanks to you for amazing facilitating this whole 2 days. It was really awesome. And thanks to everyone who participated, who spoke, and who listened, and all of my colleagues at the Financial Health Network who made all of this possible. When I started off the conference, I presented 4 questions that I think we've actually answered pretty well. So I'm going to very quickly try to give you what I heard as the answer to those questions. So the first question I asked was, what's really going on? And we heard a lot of data in that first trends track. But here's what I hear. Financial health is changing faster than ever, and new data is making it possible for us to keep track of it. 2, the summer upward trend in financial health is officially over, and I'm worried things are starting to get bad. And 3, the negative impact that we're seeing, especially without any more government relief at the moment, is disproportionately impacting communities of color, immigrants, families with children, and women. The gap is growing, not shrinking, and we heard that radical change is necessary. Second question was, what's working to make things better? So we turned a little more optimistic. And the first answer we heard is cash. We heard about cash assistance and, of course, pandemic relief. And I think now any myths about just giving cash to people are busted, and we realize the value of that, and we need to make it easier to get payments to people through whatever channels work best. We also heard that communities work. When you connect and build products with the strength of the community at the heart, you're more successful. And work works. leveraging employers and their relationships with employees to distribute cash can really improve their financial well-being, and we're actually really focused on that generally. And then finally, testing, learning and iterating works, and building that culture of testing within your organization is critical to figuring out what works, what doesn't, and moving forward. My third question was, how do we hold ourselves accountable to change? And of course, if you didn't come away with it this morning, the answer is measure, measure, measure. Use all the data you can get a hold of, whether it's transactional data, survey data, aggregated data, interviews, third-party data, our data, to understand what's going on with your customers, with the economy more broadly, and do it routinely and frequently. And of course, you can even use Spin Health Check, our new product that's just coming to market. But also be serious about the privacy of that data and make sure to share that data back with your customers. It's theirs to begin with. And that in addition, this is not just something happening in the US. Financial health and financial health measurement is now a global movement. We're proud to be a part of it. And then my fourth question was, how do we build long-term strategies for financial health? And I think as Marissa showed you, you need a map. And you need a map because you have to understand, and we heard this from our speakers, that financial health can't exist in one department or one product line. You have to bust those silos, and we have to make sure financial health is a priority across your organization. You have to show how bad the business case is when you don't consider financial health, and then you have to show how financial health can be a value creator and a value driver across client segments and product lines. And you need strong leaders across your organization, a great suite of product, and the data to prove it. So those are the answers to the questions as the way I see it. I, of course, love to hear what you guys think. So please send us any questions you have. I hope you leave here inspired. And I know, when I started off this session, I said, I don't want to cancel 2020. It was a good year and it was a bad year. But I'm now ready to move on. I'm taking all of you with me and all of these learnings. So thank you so much.
Yeah, thank you, Rob. That's a fantastic way to wrap things up. Emerge Insights may be over for today, but I think our work together is just getting started. And we heard so many great examples, so many great tips, so many great points of strategy, ways that we can really make this idea and this goal of improving financial health come to life at a moment when it's really important to do so. So thank you everyone for joining us over the last couple of days. If you haven't got enough and want to hear some more of these really fascinating discussions, I'll point you to our Emerge Everywhere podcast. We just released our 4th episode with the CEO of Hope Credit Union, Bill Bynum. If you scroll down on the Emerge Insights page, you'll see it in related content, as well as a bevy of other really great resources that speak to some of the ideas and data we've been talking about over the last couple of days. And if you scroll down a little bit further, you see a button that says Engage. It's about as clear as it can be. If you'd like to find ways to work with the Financial Health Network in the future, either joining our network, finding ways to engage our advisory services, or talking about research and measurement practices that we can put in place, we'd love to hear it. So feel free to reach out to us. We hope to hear from you all soon. Continue to stay safe and healthy, and we'll see you next time at Emerge. Thanks.
Thanks.